7th floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
That rhymes with purr.
Welcome back to the Rollup, ladies and gentlemen. You're watching the Tokenization Tower special, live from the Nest, broadcasting from the financial capital of the world. Today is July 8th, 3 days before I turn 27. I'm getting late on my birthday. All right, guys, let's be real here, Rob.
Oh my goodness.
We're from the tokenization
We're gonna welcome you to
tower.
the 27 club. Hopefully not.
Prime.
Gonna make sure you make it a 28 out there.
You guys see Plume? Plume, the nest, the tokenization tower, brought to you by Plume. Ladies and gentlemen, don't worry about your bags. It's okay. It's okay. Greg, what's going on? Good morning, Nest crew. I always wanted to skydive, but I never have. I did it in Hawaii. It was epic. It was electric. Robbie did it before me. I think he did it in Florida, right, Rob?
Mm-hmm. Yeah, I did. It was fun.
Must have
It's
been
a good
sick.
time. Oh yeah.
It was terrifying.
Yeah. There's nothing like
Yeah.
it. Nothing like skydiving. I recommend do it once. I have no interest in doing it any more than
Oh, I
just
would
the-
definitely do it again. For sure, send it. Pedialyte Zero, guys. We don't do sugar. Stay off the sugar, guys. It's not like I ate
Black
cookies
coffee.
on July 4th. Guys, we got a great show today. We got the Galaxy VP of Research. We've got Coinbase Head of AI Product. We've got Curves founder Mike.
My front tooth got knocked out. 4K to fix. I bought Arrow instead. Greg, you're a
He's
character,
one of
man.
us. One of us. One of us.
The animal
All right, guys.
spirits are coming back. We're gonna.
We got a
meme
great
point
show
season
today.
on
Robinhood chain. Robinhood chain blowing up.
Cash Cat?
Yeah, I got a text about Cash Cat yesterday at like $40 million market cap. I think it's at like 80, 100 now. Did not buy. I'm trying to stay clear. I'm trying to stay pure.
It feels like the season where you just toss a little bit into those things because we're getting these like swirling winds of a secular bull market.
Yeah, I mean, I understand that, but until I'm back above water with hype at all-time highs, lighter back ripping, Zcash near arrow ripping, I have no desire to speculate on memes. No desire. As always, guys, our topics are powered by our friends at Trezor. Visit Trezor.io. Use code Rollup10 to get yourself a Trezor. I skydived once, never again. I'm short and couldn't reach the other handle to flare. Ended up on an electric fence with a cow staring at me from 5 feet away.
Embarrassing.
Wow. Wow.
Atan, give you a little sound effect for that one, Shine.
Guys, we did a crazy Atan pre-recording yesterday for the street segment. You guys are going to love it. All right, guys, let's keep it rolling into the weather. Before we do, let me tell you about our stablecoin partner, Frax, today, building infrastructure for the future of digital money. Open, stable, borderless. Visit frax.com to learn more about what they are doing with FRX, USD, and more. 79 degrees in New York City. Feels like 82. It's going to be 84 highs today. Beautiful day, honestly. Sunny as hell. You got the Strait of Hormuz, also known as the East River. It's filled with battleships, as you guys can see here. Filled with battleships and army ships and things. I don't know, but a plane crashed in there. A small like plane that people fly on their own last week. So that was a bit weird.
Strange. Sunny down here as well. It's a beautiful day. We've been getting these afternoon showers. Weather segment is something. All right, I'll tell you. I think we should just keep moving along because Shine is shining.
Yep.
Good
As always,
work,
guys, our
Greg.
weather is powered by our friends by Relay. Visit relay.link to start swapping seamlessly across chain. Let's get into the markets. I know this is what you guys want to hear about, what you came for. Why are my bags down? Before we do, let me tell you about Denari. Denari is our tokenized equities partner on the Rollup trade. Tokenized SpaceX on Hyperliquid today. SPXD is the ticker, 1-to-1, fully backed, powered by Denari. So, Bitcoin, Ethereum, Solana, Chainlink, Near. A lot of red out there.
Looks like markets are down. Iran violated ceasefire, and I think once again we're seeing this macro just whipping. And so, I mean, this is part of my thesis around why TA doesn't work. Markets were great yesterday. I can hear you now, Andy. I just think. And obviously, it's not like you can do some fundamental analysis on like, what the revenue projections look like for Near. And then all of a sudden you're going to make it big because you could have, some random macro event come in and just affect the entire thing. But I do think, I mean, look, we got to get out of the woods when it comes to the war. That is what's holding up Bitcoin from making higher highs. I don't know what do you attribute like the rise in these majors to over the last few days before, obviously we had the ceasefire broken. That's what's leading to this today.
Yeah.
But it felt like majors were just kind of charging higher. mean reversion? You got anything? What do you attribute it to?
Yeah, I don't know, man. Just a lot of bearishness at the lows. Still think we're in for the summer bounce. If you look at the midterm years for Bitcoin, we always get a summer bounce that ends up rolling over into new lows that set the final lows. So that seems like the most obvious outcome. And I would expect that to continue to happen. All right. And so, yeah, I mean, I think that basically we're getting that summer bounce into the middle of Q3, and then we'll kind of reassess there. Our thesis was we want to see this summer bounce lead to all-time highs on our coins. And then hopefully our coins set a higher low in the coming months rather than going back to new lows like Bitcoin and ETH probably will. So, Freedom Guy, don't laugh. I'm sensitive. Yeah. What's your take, Rob?
Yeah, I mean, like just based off historical results, if we always get new lows, we get this summer bounce, and in these midterm years, like I mean, look, I could see history repeating itself. Certainly rhyming. I think it is a matter of outperformance. If the typical market as a whole is looking at making new lows, we want to try to make some higher lows.
Yeah.
I have been saying that I think the things that are outperforming now are outperforming based on fundamentals, and they will continue to outperform. But you do get these secular pops of attention and intensity, like you're seeing on Cash Cat, and how do you even? I mean, how do you even do something? How do you even play something like that? Without just like spraying a little bit into it, and then you see the Robinhood CFO has it in its bio, and then you see it picking up steam, and then you just kind of ate more into it, and then bam.
I mean, it's flying, that's for sure.
Yeah, I mean, we have seen this before, but when it comes to kind of the more majors, fundamentals, these sorts of things, we gotta get out of the woods.
Dude, Rob, I fumbled. One of the Arbitrum guys sent me the Cash Cat ticker at 8 p.m. last night. And it was at 30 mil market cap. It's at 130 mil. No. Wait.
I mean, you missed out on
That's what I mean, dude. I would have put like $2,000 in it.
There would have been, there would have been a 4x,
always,
which would have been nice, but it's not like there would have been any, like, I saw it was up like, 1,000x over.
Yeah, from the lows.
So.
All right, guys, as always, our market's powered by our friends at Zama. Oil is way back up to 77, 78. Macro conditions are looking a little bit shaky. S&P and NASDAQ are down today, kind of pulling down a lot of the other tokens and broader market. So, yeah, I mean, that's my take. As always, our market's powered by our friends at Zama. Visit zama.org to learn more. Let's get into the news and more. Before we do, let me tell you about Near, your home for building, discovering, and using apps on chain. One account, no borders, your financial life on chain. Visit near.com to learn more about what they're doing today. All right, guys.
Speaking of Near, we have Freedom Guy in the chat saying how they put a max supply cap, which is going to lead to ultimately Near becoming deflationary. I saw that they opened up confidential intents for general availability. That was a major piece of news that I saw yesterday. Freedom Guy, if you have a source, go ahead and throw it in the chat. We're going to want to talk about this because Near's a partner. Love those guys. They have revenue. They have privacy. They have AI. It feels like there's a lot of converging narratives for Near. They also helped unlock Zcash, which obviously Murr is commenting on here. Zcash's new Ironwood pool is being formally verified to rule out all undetectable counterfeiting bugs up to the underlying cryptographic assumptions.
My entry was 6 million on Cash Cat for Sigma Slayer. Wow. Yeah, so Rob, this is Project Tachion's update. Basically, the new Ironwood pool is being formally verified.
Yep. I mean, Murr is huge on this. And we heard from him directly. He came on the show and he was talking about this. That is ultimately what is going to send Zcash higher. And I think Zcash was just leading here. I tuned into the charts yesterday. I saw that Zcash was up like 7% on the day while everything else was starting to turn down. Man, it's tough out there. I mean, everything's just hinging on the war, which is pretty much all. It's just impossible to predict. Be real nice to hold this 60K level.
Yeah, I mean, Zcash is at 460. It looks really strong. I mean, this was like the biggest FUD, right? It was like, okay, we're gonna get this. You know, is there this infinite mint bug? And I feel like if this goes through, this pretty much takes care of all of the FUD. Like all the FUD is gone. So, you know, I think that this is a really, really, really strong piece of news here.
Yes. Guys.
What do you mean, yes?
Buddy, I can't hear you. We're having some audio issues.
What do you mean, yes? Yes, I was saying that Zcash's new Ironwood pool kind of removes the FUD from that big ass dump that it had a huge dump. And everyone was like, oh, there's going to be, nobody knows how many tokens are in circulation. It could be infinite. But I think that that's kind of like now beyond, like it's behind us.
Yeah.
So I think we're looking good here.
Yeah. And I think, you know, this is going to get implemented pretty well. Obviously, there's some sort of upgrade risk whenever you implement these big changes. But I do think that this is going to be a net positive for the Zcash ecosystem. It's just the flows are just incredible when you look at, you know, what is happening to Bitcoin, how it's been co-opted by Saylor. And then every single censorship resistant money principle that applies to Bitcoin also applies to Zcash. You don't quite have the immaculate conception that Bitcoin had.
They call it a pre-mined shitcoin. The Bitcoiners do.
Yeah, they do. I wouldn't quite go that far, but it is it does have a lot of the same principles that Bitcoin does.
All right, guys, that's Zcash. I think the bear case has been nullified as long as this goes through. So we're tracking this and hoping to see Zcash trade to 2,000 to 3,000 in the next bull, at least. Let's keep it rolling into Chris Perkins from Franklin Crypto, who was on the show previously and basically argues that crypto and TradFi are no longer different. You know, you have a $127 trillion equity market that's getting tokenized, and you're not bullish enough. And tokenization is the next phase of market modernization from the finance side. Meanwhile, liquidity is probably going to migrate faster than people expect on chain. So let's hear what Chris has to say. I think he's right. I think he's spot on, actually.
Can't choose anymore.
I actually think he's
you can't
super
do
spot
it.
on here.
It's one market. Finance is crashing together. You have a $127 trillion equity market that's tokenizing. It's going to happen overnight. You've got perpetuals. It's all coming together. The foundation has been set. Our clients, they all have one thing in common. Their boards are asking them, what the heck are you doing in crypto? Previously, they would say, I'm doing nothing. And they'd say, great, that's wonderful. We don't want you to touch this stuff. It's way too dangerous. Now the answer is, what are you doing in crypto? And they're like, I better have an answer. When you look at a company like Franklin Templeton, and as I was onboarding, Ryan, the one thing that I really wanted to emphasize to the team, it's the risk guys, it's the ops guys, it's the cyber guys. These are the folks who really bring that edge and allow you to deliver an enterprise solution to institutional clients that have to come into this space because, again, there's no more TradFi and crypto. It's one market. You can't choose anymore. You can't.
Yep. I agree. And I think this is the bull thesis that we keep talking about. We keep talking about this being the bull thesis for tokenized assets, for Hyperliquid, Lighter, Aerodrome, Near, list goes on. Uniswap, Robinhood chain revenue has been super high. Sky, Syrup, all of these assets, right, that we have come to know and love. I think this is the bull thesis for them. This is coming together.
Yeah, I think so too. I mean, the thing is that, and I saw someone else put a tweet out about this, which is like, what is happening to the re-rating here? And it's, you've got like the potential TAM, and this happens in every investment pitch deck. You look at what is the size of the market, and then how much of the market can you capitalize? And I think, we were looking at a market that had a potential size of $2 trillion. Now we're looking with RWAs, with equities, with digital assets, with commodities, you're looking at a market the size of $400 trillion. And I think
Trillions.
yeah. And you can then look at, what market share some of these DeFi companies are poised to make. The meme coin, Bitcoin, Zcash thesis is separate from this. But I think, you combine those two and you can end up where a lot of these protocols are in a position where, they are competing on a level playing field. And I think that market size is going to be an expansionary pressure, but I do think that there's contractionary pressures as well, like the network, Jevons paradox, network bootstrapping thesis of all these L1s. You don't need revenue, you don't need these things. There is some of that, but I think we're going to be being on a level playing field with the largest financial institutions. You don't get to pick and choose. I think you are going to have to hold yourself to a higher standard, and you're going to, have trillions of dollars at stake. And I think, some of those are expansionary and some of those are contractionary pressures, but ultimately the expansionary ones are greater, and, the size of the pie gets bigger for everyone.
Yep. No more crypto. It's just TradFi 2.0. We're investing kind of silly because this is not what crypto is meant for. But hey, you want to make money or do you want to be right? Did you guys see Vanguard finally bent the knee to digital assets? I did see that. And I do agree with the sentiment dislocation being like, I didn't come here just to trade tokenized assets on chain. I didn't come here just to make a marginal improvement to TradFi. That's not what I came here for. But I think it's an annoying but necessary step in the process. And so I think that's how I think about it, New Type. And I think that's it's this necessary step to unlock the vision that we all are here for. And I think that's the right way to think about it.
So I got one more thing on this, which is a thesis that I've been applying to more and more use cases, because the things that I find are true just continue to show up as true in more and more things that I look at. Yeah. It originally started out with stablecoins where, hey, if my consumer behavior is just tapping a card, I'm just going to continue to tap a card. The merchant just needs money in their bank. I don't know the mix of, 5-year treasuries, 10-year treasuries, who has mortgages at this bank. The bank just shows me a number. And then when I tap my card, it draws down that number. In the back end, that's where I think the stablecoin adoption is going to come from. I just get shown a number. The merchant just gets shown a number. I just tap a card. But when it comes to sending the money from my bank to the merchant bank, that is where stablecoins get integrated. The merchant nor me ever have to touch it, never have to change our consumer behavior. I'm starting to think that equities could look the same way, I think we started to talk about this a little bit yesterday when it came to Robinhood chain. We started talking about how Robinhood, the brokerage Robinhood, the equities that they hold on behalf of clients could make it onto Robinhood chain. But I'm coming around to the idea of Robinhood can take it upon themselves to tokenize all the equities. Me, you, our grandparents that have no clue about this kind of stuff, they don't ever need to know or care or have to press any buttons to understand where their equities are being held and how they're being held. All of that can be obfuscated away. My bank shows me I have a number on a screen. That's my cash account. My brokerage shows me that I own this many stocks. And they don't have to tell me whether it's tokenized or not. And when it comes to settling those equities, that's when they can take it upon themselves to tokenize and transfer for instant settlement. The only difference that it looks like to us is just, hey, your money arrived in your account quicker and it cost you less in fees. But everything that you did when it came to buying, selling, trading, holding, transferring, all of that remains exactly the same.
New Type says it's all a simulation, bro. It's all a simulation, bro.
I mean, when it comes, it depends how far you look. How deep in the simulation do you want to go to really understand what is happening behind the scenes? I mean, this literally is the movie The Matrix. You can look at the architect and you can understand what gears and levers he's pulling, or you can just look at the number on the screen. You can just say, I just have Robinhood, equity in my account. You don't have to look at, was it held at the DTCC? Is it tokenized? What ledger is it on? Like, who are the SPV wrappers in between me and my stock certificate?
Guys, I got some new alpha on a new hyperliquid spot equity provider. It's gonna be interesting. All right, guys, we've got Lucas here in the tower. I'm gonna pass it over to Rob. Before we do, let me tell you about Infinify, building DeFi infrastructure for simpler access to on-chain yield, liquidity, capital allocation. To explore more efficient finance, visit infinify.xyz.
All right. Hope you guys enjoyed that little bit of rant. I really do think that's the way that this adoption cycle is going to go. We're going to see the institutions adopt. The consumers, if you're a consumer, retail, you don't run a business, you don't own a financial institution, participate in one, you've already been adopted, integrated, or not. You've already said crypto is the best thing ever, it's the worst thing ever, and you have taken decisive action accordingly. Everything else in terms of consumer behavior is going to be done by the institution. AI, on the other hand, I think people are still on the fence. Nobody is talking about AI nationalization. AI is not just a technology, it's a military project. According to Ari David Paul, we could see a Los Alamos style lockdown of the AI labs in the distant future. I mean, we're already kind of seeing it with, Fable 5 getting nerfed. I saw that OpenAI had permission to release its 5.6 model, but the thing is they had to get permission. So let's see what Ari has to say.
AI is that. Mythos is a military project. I have some AI friends who are prepared to have a Los Alamos style lockdown. They expect the US government to fully control them within 3 years. This is a hypothesis. I'm not sure I agree. But when you think about the most critical national defense projects the US has ever had, with the nuclear project, we put all of our nuclear scientists in the desert and we spied on them. We wouldn't let them leave. They couldn't make phone calls, right? When we treated it like a military project. AI is that. Mythos is a military project. And at some point, the US government and other governments are already doing this, at least Chinese, the US government may start approaching it that way and say, oh, you're a top engineer on, machine learning at Meta. You're only using a government issued cell phone. You're only traveling with permission. You're not allowed to leave the country. You're not, and if US doesn't do that, we will be leapfrogged by China, because they can basically use corporate espionage to get to where we are and then go forward. So all of that affects these as investments, right? In ways I don't fully understand.
So part of what Ari's, I think the premise is correct, but the conclusion about going into a Los Alamos style lockdown with, the government effectively controlling, who is able to leave the country and these sorts of things, I don't know if that conclusion is the right one to draw. The premise that he's talking about of, Chinese state AI companies and entities distilling the US frontier models, that is absolutely happening. There was a tweet from Tulip King that went viral, and Chamath, I think, even piled onto it, which is effectively like, hey, this was back, I think this was when Fable was coming out, or this might have been when ChatGPT 5 was coming out, something like that. But it was effectively like, oh, this model looks great. Can't wait to use it for 1/20th of the cost at 2% degraded performance when for my Chinese brothers and sisters. Like, that is absolutely happening. They are distilling these frontier US models, and they're going to continue to do that. The fact that, they may put the clamps on that and say, like, anyone with access to these models is going to become a top secret, required top secret clearance. We're gonna have to see. I don't know. I think there's just too many people to get control over. Let's keep moving. We'll do one more tweet, then we'll get into daily equity. But before we do, let's give a shout out to LeFi, our intense and universal market access for digital assets. LeFi is a great partner. Been working with them for a long, long time. These guys power a lot of the order flow underneath the hood. They have a great aggregator into themselves on Jumper, and a lot of the SDKs when you're using on wallets, when you're using lots of things. You may not know, but LeFi is embedded underneath the hood. Satoshi knew. A16Z Crypto says that Bitcoin solved a 40-year-old academic problem. It actually took quite a few years for people to realize that this is the kind of solving a Byzantine agreement problem, a very core academic problem. Yeah, the Byzantine problem, in this sense, Bitcoin is kind of a huge revolution in how solve Byzantine agreement. In fact, you look at early emails from Satoshi Nakamoto, he said the core technical aspect of Bitcoin is solving Byzantine agreement. This is why it's such a huge 0 to 1. It's also relevant in a military context. You can actually agree on things with someone else that you may or may not trust. Let's go ahead and play the video.
Bitcoin was not just a whole new disruption in distributed computing. It also has innovation in economics and cryptography. But here we're going to focus on the distributed computing part. It actually took quite a few years for people to realize that this is kind of solving a Byzantine agreement problem. So Byzantine agreement problem is kind of this very core academic problem that has been studied for 40 years. And in that sense, Bitcoin is kind of this huge revolution in how to solve a Byzantine agreement. In fact, if you look at early emails from Satoshi Nakamoto, he kind of realized that. So he said, the core technical aspect of Bitcoin is solving Byzantine agreement. Bitcoin was not just a whole new disruption in distributed computing. It also has innovation in economics.
Yeah. I mean, it's huge. We've had innovations on top of this. I like to say that the casino funds the research lab, and that is what we get when we get the prediction market complex, right? But then you get ZK, and you get meme coin speculation gambling, but then you get snarks and starks. These things are actually complementary, and it's very, very cool because, well, you can kind of do both. It appeals to multiple groups of people, but they actually end up helping one another. And a lot of times you kind of are able to accrue a lot of value by serving that casino crowd. But then if we can apply those resources into valiant pools of capital for solving real things, I do think that it makes a lasting impact. Next, let's go to daily equity. Then we are going to get you guys back into the tokenization tower with Andy and our first guest of today. Okay, so I wanted to cover this on Daily Equity. Obviously, Daily Equity is powered by our friends at Denari. They're doing incredible things with tokenized equities. Like I said earlier, part of the tokenized equity thesis here is that brokerages as a whole are going to tokenize their shares that they own on behalf of their customers. Consumer behavior may not change, but you're buying, selling, trading, holding, transferring all remains exactly the same. The only thing is now when you go to settle some of these equity trades, it happens cheaper and faster, overall better experience, but consumer behavior never has to change. We're talking about this in context of Robinhood. In today's segment for Daily Equity, Eric Balanchunas, great ETF reporter, works for Bloomberg, covered a lot of his stuff on the show before, published a note that he's been thinking about for months about how the U.S. stock market has arguably become too big and too important to fail. It's basically America's retirement fund now and possesses even the savior of possibly even the savior of Social Security, which is expected to run out of money in less than 10 years. The important thing in that first paragraph is, when it says it becomes too big to fail, you might just think, oh, the stock market is huge. It's been going up for a long time. When we hear people use the terminology too big to fail, this has implications. Specifically, it means when you hear that something's too big to fail, it means that the bailout powers at large are incentivized to keep this thing afloat. And that has never been applied to the stock market. If you remember 2008, 2009, actually literally cause for the creation of Bitcoin, there were banks that got bailed out by the government because they were, quote unquote, too big to fail. And so once it seems like these banks start to come down, the people in control of the money printer literally print the money, inflate it away so that these banks have money to pay back their debt. And then the government comes in, maybe they take an equity interest or they take some sort of part ownership. But the point is that the banks don't fail because they're too big and too systemically important to fail. The lender of last resort, the people in control of the money printer, are the ones that come in, save the day, and bail out the banks. And in this case, what Eric Balanchunas is talking about is bailing out the stock market. What that could mean, and we're going to get into it a little bit, but you've heard of Trump, not only Trump accounts, but also these large public companies could potentially donate stock into Trump accounts. That has very funny implications. We've also heard of the government taking equity ownership interest in systemically important categories of industry. That could mean quantum. It could mean AI. He's kind of floated these ideas. We'll see what ultimately plays out. Let's keep reading. Currently, 55% of people own stocks, by far the most in the world. And with Trump accounts bringing in 28 million additional Americans into stock ownership, the vast majority of people, including the top 1% who own half of the stock market, middle class and lower income, will have financial interest in the health of the stock market, and they're all voters. This means the political pressure to keep stocks out of a prolonged bear market is going to be very, very powerful. We know this. Trump has incessantly been talking about how, the stock market's at all-time highs. Voters should be happy. His political base should be happy, even though at the beginning of the election cycle, he said, hey, we're going to be going for Main Street, not Wall Street. Yet, the top 1% who own the top half of the stock market, they're all, they're the ones celebrating. He's speaking directly to them as ownership of the stock market, saying they should be happy. This was a different base that he was talking to at the beginning of the election cycle. As such, by the government and the political pressure to keep stocks out of a prolonged bear market, as such, I think there's a good chance the Fed will buy equity ETFs in the next major downturn to support market, and it will become common practice going forward. The only commentary I have on this is that Kevin Warsh has said that he doesn't want a large Fed balance sheet. He's talked about lower interest rates, but he's also talked about essentially the destruction of quantitative easing and a much, much smaller balance sheet. He's talked about how, it's taken 17 years to get the balance sheet so big, and it won't take 17 weeks to get the balance sheet small again. This seems to directly contradict that point. China and Japan already do this. They may even target certain sectors or capital expenditure co-signed with the purchases. This is a massive variable that I feel like is a blind spot among the experts out there, and why the bears get run over time and time again, although I think investors are onto it, as evidenced by the persistent flows into ETFs during pullbacks, as well as a survey of 1,000 people showing 3/4 of them are confident the Fed will bail out markets in the next crisis. I don't know about that one. This is just one byproduct of the nothing stops this train monetary supply explosion and debt extravaganza sweeping the world, but especially in the US, which at this point feels irreversible. My thoughts is that I think this could happen, but it doesn't seem like this is the Fed chair to allow this to happen. I think it would take an extremely pronounced drop in the stock market in order for him to step in. He has said that he wants a smaller balance sheet, but he also realizes how systemically important the stock market is. So I find this concept extremely, extremely compelling. I think he also makes a good point where the bears get run over time and time again. This is ultimately what I think happens. It just may not happen like it may not look like the Fed bailing out the stock market by taking equity ownership in, equity ETFs. That would be a leap and bound beyond what they've done in the past. They've bought corporate debt in the past, but they haven't just straight up bought equity ETFs. I don't know if Kevin Warsh is the guy to do that, but I do think, I agree with his premise. The stock market is so systemically important that something has to be done. I don't know if the Fed buying equity ETFs is the thing that would be done in this case. But ultimately, we are going to find out because it is inevitable. The stock market does turn. We will see what happens in that situation. Guys, we've got our first guest, the VP of Research at Galaxy, live in the tower. He's going to be coming up right after this. We're going to play the animation, and we're going to get Galaxy in the tower with Andy live from New York. Guys, right after this, don't go anywhere.
Alrighty, guys, we are live here from the Tokenization Tower. We've got the VP of Research at Galaxy, Lucas, previously had roles at the Carnegie Endowment in Beijing and Goldman Sachs. Sharp macro guy, on-chain perspective, doing a lot of writing on Ethereum. Welcome to the Tower, man. Great to have you, Lucas.
Thanks so much for having me.
Yes, sir. Been loving your work recently on Ethereum. I think it's a great place to start, just to kind of lay some context, man. I mean, we saw Ethereum kind of go through this transition phase with the EF being this very reductionary kind of force. Their view was we are just going to reduce our impact on Ethereum. And it's kind of led to almost like this privatization of different sectors of Ethereum. You've got Etherealize, Bitmine, SharpLink, Joe Lubin's Consensus, now ETH Labs. And you've got this Ethereum institutional arm that also rolled out, all while Vitalik kind of came out with a post detailing the technical upgrades for Ethereum. And so in this context, right, we're seeing kind of a transitionary period for Ethereum. Obviously, price action across the board for crypto's down, but Ethereum itself feels to be singled out more than ever because of its #2 spot, given its significance in making a lot of people wealthy over the last 5 years. So you've been, writing about where Ethereum goes from here, from the tech side, as well as from kind of like the institutional side. And I think people are kind of giving up on the Rollup-centric roadmap as well. Base is exciting, maybe Arbitrum's getting some traction here, but a lot of the others, people are kind of giving up on this. Robinhood chain's obviously exciting. So maybe just talk us through your view right now on Ethereum, from the technical side, from the roadmap side, from this kind of privatization side, and we'll get into it.
Yeah, I mean, so, I've covered actually primarily Solana at Galaxy for a long time. And about a year ago, I started to get a lot more interested in Ethereum because I saw a lot of corollaries to what I think happened to Solana in like 2022, 2023, where a lot of people got disillusioned with the chain and kind of just stopped paying attention. And I think a similar dynamic has been happening with Ethereum over the past 2 years. And so, over the past year, we've seen this straw map come out, which I think has reoriented the chain in the right technical direction. We've seen the Ethereum Foundation move towards, this subtraction theory, kind of reducing their overall role in the chain, but still focusing on what ultimately should make Ethereum valuable, which is credible neutrality. And then, we've seen the emergence of these kind of other institutions that are going to help push ETH adoption, whether that's on the institutional side or for ETH, the asset. And so I think really with the final announcement of the Ethereum Foundation layoffs the other week, as well as the rollout of ETH Labs and ETH Institutional, we've kind of seen the culmination of all of this changes that have been happening on Ethereum. And I'm hopeful that basically over the next year or two, Ethereum's now going to focus a lot more on the execution side. And the first major update that's going to come with that is Glamsterdam, which is expected to ship in Q3 this year. So for me right now, it's kind of all right, Ethereum has shed all of kind of the stink around it from the past few years. It's kind of reoriented itself in what I think is the right direction. It's starting to pick up momentum. It's addressed a lot of the concerns that outside people had of it. And just not enough people are really paying attention to what's happening on the ground now. And if they can ship Glamsterdam later this year, then show progress towards the future tech upgrades, and also start to show real dedicated adoption from institutions and maybe some on-chain activity from the retail side start to pick up, the narrative can shift really quickly in my mind.
I mean, as I said, the narrative's been, Ethereum's not good enough and it's too slow. It doesn't compete with Solana. And there's kind of this factor of where does Ethereum go from here? Because when you ask the SharpLink folks or any kind of Ethereum bulls about the thesis, it's typically maximum transaction activity with RWAs leading to this burn, and kind of that being the main revenue driver. But I mean, we've just seen gas fees be so low for so long. That thesis is kind of hard to play out, or it's hard to see play out. What do you what's your current bull thesis on Ethereum from the business side of things, in terms of execution and in terms of generating meaningful fees? What does that look like?
Yeah, so I think for something like this, doing the fundamental case for an asset like ETH is very challenging, especially right now. What I think is going to drive a lot of attraction for ETH itself is probably going to be one narrative, this idea that, hey, it remains the best credibly neutral settlement layer in the world, and there is going to be demand for that. And then I think the other thing that's going to really help Ethereum is just this idea that it is moving in the direction that you want to see for where blockchain technology development is going. Quantum resistance, focus on privacy, scaling the L1 using things like ZK. And then I also don't think the L2 thesis is going away, to be honest. I think the death of L2s is very overstated. I think they will continue to play a really important role in Ethereum's growth and development. I just think that you need to first get the idea that, all right, the L1 itself is an okay platform to host the most valuable and for things to settle to, while institutions can get more comfortable using Ethereum L2s if they want, their own more controllable private ecosystems to build on. So, the launch of Robinhood's L2 using the Arbitrum tech stack, I think is a testament to this. I think if you talk to the Etherealized guys, to the ETH institution guys, they've got a lot of irons in the fire. I would really like to see some announcements start to come out. And so I think, for myself, I'm someone who used to be very skeptical of ETH and now feels very positive on ETH. I think everyone else used to be very positive on ETH and is very skeptical because they're like, hey, we've heard all these promises in the past. For me, I'm like, we've heard all these promises, but they've been the wrong type of promises. They're now finally the right type of direction you want to hear and the right type of adoption that you want to hear.
I agree.
And so let's just deliver on it. If we don't see Glamsterdam ship in Q3, for me, that's kind of where I'll be like, all right, this is a very bad sign, because I do think at this point, the pace at which they can execute and ship is going to become increasingly more important.
Yeah. Yeah. I mean, we've been just narrowing down on perps, tokenization, stablecoins as these big three.
Yeah.
You can throw in vaults in there. You can throw in kind of prediction markets in there as well and kind of have this big four. Yeah. And so, it's very clear to me that Ethereum is winning the perps battle, the tokenization battle, and a stablecoin battle. It has the most amount of tokenized assets, the most amount of stablecoins, and all the perps platforms are either Ethereum L2s, EVM based, or are in some capacity built within the Ethereum ecosystem. And so the question just becomes is longing Ethereum the right way to express the bullishness on the perps trend, on the tokenization trend, and on the stablecoins trend? And we keep saying there's actually better ways to express it. Like my personal portfolio view is more of the perps view is hyperliquid and lighter in perps. Sure, you can buy Ethereum for perps, but it's not really a direct bet. For sure. Tokenization is still kind of a question. It's kind of maybe Ethereum is the best securitized, just went live on the NYSE at well over $1 billion valuation. It's down significantly since launch, but maybe that's another good way to express that bet. Stablecoins is a bit difficult. Circle, I guess you could buy that stock. You can't invest in Tether. You could buy Athena or Sky, maybe some others. And so our consistent mental model shaping here has been trying to figure out the best way to express the bullish thesis on these three megatrends. These are decade-long megatrends that we think that they're going to all maximally grow. And so perhaps Ethereum is part of that, or is the best way to express the view of the three, or maybe there's more risky, nuanced views for each category, but then Ethereum kind of swallows them all. Just curious your view there.
Yeah, I mean, I think you're definitely right. There's going to be better individual names for specific narratives or specific themes to express, just because Ethereum is such a broad, it encompasses so much. But I think it's a good base asset on which a lot of this stuff is going to be built. I also think ultimately for Ethereum, my own personal view is it's going to have kind of a Bitcoin cycle over the next few years, where it is going to become this idea of, we need a credibly neutral settlement layer, and Ethereum is the best option, is going to drive a lot of flows to it. And so that doesn't necessarily mean it's going to be the best performer. Obviously it's already a $250 billion asset. It's massive. But I do think it's going to be a lot safer, and the relative performance of it's going to be pretty strong relative to what we saw over this past cycle. And so, I love Solana still, and I actually think I've been maybe too negative on Solana recently, but my framework as of recently was, Ethereum's going to kind of have a Bitcoin play over the next few years. And Solana is going to have an Ethereum-like play. I now would retract that on the Solana side. I think there's a lot of positive stuff that's emerged over the past few months that have changed my mind. But I do really think Ethereum should not be discounted as heavily as it was.
Yeah, interesting. So there's a kind of thesis that we've been pushing here, and that the market's been pushing, which is and we call it the return to fundamentals. You call it tokens that are businesses, right? On-chain businesses. And I mean, maybe the pendulum has swung too far in this direction because we're in a bear market. Everyone hates tokens. I'm sure we'll get some network effect narrative-based runners in the coming bull. But very clearly, investors are demanding more from founders and entrepreneurs in the space than they ever have. People just don't want to buy the nth VC backed, L1 or the next iteration of like materially better decks or like the 12th perps decks. So like there's category leaders and there's like the outperformers of this bear. If you look at them, they've been these assets that have like really strong revenue and really strong buybacks.
Yeah.
And so I'm just curious where you think we are in this progression of the maturation of the space. Because, I think a lot of the institutional investor class coming in, they want to value these assets in a similar way that they do equities. And so there's a lot of nuances to this shift, everything from like token holders, quarterly investor calls, all the way to like buybacks to like emissions, reducing inflation. We saw Solana and Near do that.
Yep.
There's talks of Ethereum issuance changes. Just give us kind of your high level view on this structural shift of token and token investors in the space and kind of what that looks like from the institutional perspective. What's driving that? Do you think it'll continue? Where do you think we are in that shift?
Yeah, I mean, first off, I think it's a very positive shift. I think it's directly the type of stuff you want to see for a maturing ecosystem. And I mean, I don't think it's going to stop anytime soon. I do agree that I think it's very much a pendulum, and I think because of the fact that we're in a bear market, right? So in bear markets, like you kind of lose that like belief and narrative factor, and you have to look at fundamentals as a way to feel comfortable holding these types of assets. That's why they perform so well. A lot of these projects have also figured out a way to kind of diversify what's driving their activity away from crypto native activities, right? And so that's why they've been very successful. But then, you also look at something like a pumped up fund, right? Which, actually it does have very strong fundamentals. It's, on a daily basis, like the second or third most revenue producing application.
Huge. And good tokenomics in terms of
good
flows,
tokenomics
in terms
and
of
flows.
buybacks.
Exactly. I mean, it beats out Hyperliquid some days.
Yep.
But there's just a view that, maybe the meme economy is not a very strong economy in terms of lasting through cycles. I would argue the opposite. Like, it's actually shown it's very resilient in this downturn. And so I do think ultimately the pendulum's going to swing back. And, I think that's just the nature of crypto. It's a very cyclical industry. And, people, once liquidity flows back in, people do start to believe and they don't really care about fundamentals anymore. It's just much more of like, hey, like, this is the newest invention that's going to change the world, and having a token is the only way to get access to that. And so that's very much a bull market thing. I do think like we will see, I think memes, we've already seen like memes have made like a semi comeback over like the past 2 weeks. Yeah. Ansem, right? What's happened on Robinhood
and
chain.
Robinhood chain, Cash Cat or something.
Yeah. Like that demand, like that kind of like animal, like retail instinct is always going to be there. It just only shows up in the bull markets, and that's when we'll see it come back. For now, though, all these developments are extremely positive. I hope they continue. I think for assets like Solana and Ethereum, where it's much more like the L1, it's going to be hard for them to ultimately make the fundamental case for why you should hold it. It's going to be driven much more by this idea of like, I need the asset to transact on the train, right? Like we saw with NFTs, like we saw with meme coins, or it's going to be something around, hey, like this actually is kind of have like a store of value or some sort of like durable thesis like that makes me want to hold it, or I need it to stake and things like that. So I think the pendulum is all the way on this fundamental side because of where we are in the bear market. I expect that over the next year or two, it's going to like come back a little bit. It'll probably at some point get all the way back to the speculative side. And, that would be a good sign to kind of like reevaluate what's going on in the market. But it'll probably be a positive sign for crypto asset prices as a whole at that point.
Yeah, exactly. And I think it's actually funny if you think about the performance of the assets in that transition, like maximally outperforming right now. Hyperliquid, Lighter, Airdrom's been doing pretty well. Couple others that have like really kind of stood on their fundamentals. You could probably argue that as we go down towards that pendulum shifting into more of the bull phase, you actually may get underperformance in the fundamental assets. Like I tend to think that these things have a higher floor but a lower ceiling. Zcash, though, on the other hand, for example, really low floor. Like that thing could tumble. I mean, we saw what happened on that X-Point news or whatever it was, right?
100%.
But like the ceiling on that thing in a bull is like private money, bro.
Yeah.
Like,
yes,
you know
the
what I
narrative
mean?
for it is very strong. Yeah, no, I mean, I totally agree. It's just the nature of these crypto markets, right? And like, I think the tokens are starting to mature, and that is ultimately what will dampen some of that activity in the future. Ideally that comes from better regulation that actually allows people, I think the SEC announced today that they're going to release their new framework for what their like regulatory sandbox is for crypto projects soon. You know, I'm not sure what happens with Clarity. My boss Alex writes about it a lot, and I think his odds are 50-50 right now. But that can help on the token side as well. But I think until those kind of frameworks are in place, you'll continue to see kind of like the surge. And I will be interested to see what happens with the performance of some of these fundamental names, because you know, you could make the argument for something like Hyperliquid that actually, you know, in a bull market, it should perform even better just because the crypto volumes come back as well, right? 100%. So yeah, I mean, that's kind of where I am right now. Generally, I just feel like we're in the depths of the, you know, bear market right now. And like, you gotta, asset prices are one thing. What you really want to be looking at is like, what are projects that are continuing to either, if they've had success, build on that success, or if they haven't been success, identify the way they need to pivot, and are executing on that, have the runway to kind of survive a bear market, and are starting to gain traction in these new areas. I always like to be looking for frontier markets, because I think that's where most of the upside is in these bull markets, is like new markets that emerge out of crypto that nobody was paying attention to in the bear.
Yeah. Well, I'll have you know that the chat is arguing about Cardano while we speak, so that's good to know.
Dino coins they always have their place, right? You know?
Yeah. Thinking about the reshuffling of the top 10, top 20 crypto assets right now, you know, obviously Hyperliquid surged up into the top 10. I think we've seen a couple other kind of, you know, Zcash surged into the top 15-ish. Is there any thoughts on how you may see that top 15, 20 reshuffling in the next bull? You know, thinking about, you know, I personally think that there's going to be a lot of RWA tokens up there. Right? Like, I mean, there may be a tokenized equity in terms of market cap on chain, you know, in the 50 billion range, right? And so you get like Figures HELOC is up there currently, I think in the top 10 or 12 right now. In terms
Canton,
of Canton, stuff like that, right? So what's your every cycle we get a reshuffling. There's like a new top 15 almost. Typically the top 3 to 5 stay relatively the same. But what's your view perhaps on what may cause that, or specific themes that you think will dominate that next kind of reshuffling? What's your takes there?
Yeah, I mean, I think you're right in terms of like what the new names that might appear up there are, and I personally would expect like Bitcoin, Ethereum, Solana maintain their status in the top 10. You know, as I just outlined, I remain bullish on Ethereum generally. I think the new kind of names that probably pop up there that aren't there now are going to be on the AI crypto side. And I think that is probably where most of the most interesting like innovation is happening in crypto right now, outside of on the RWA tokenization, more like corpo chain side. I think there's a lot of tailwinds going on there. We're seeing it in the press play out, whether that's, you know, government regulation and preventing access to models, whether that's like figuring out how to kind of be like most optimize your price, how much you're paying for model access, and the need for access to open source models. And then I also think there's some really interesting stuff in the GPU markets and in actually trying to tokenize inference. So new form factors for being able to pay for inference and access inference. You know, Venice obviously has done very well. BitTensor is one of these names that kind of like hangs around there. I don't think they've quite like, you know, established a good definition of what they are and what their value is, but they have really good builders on there. So I'm watching very closely the AI crypto space. I think that in the next year or two is where we see a ton of new names emerge. Some of them already launched, some of them going to launch. That are going to attract a lot of interest and actually have use case, because ultimately what a lot of these projects are providing is ways to get access to inference, which right now there's infinite demand, and whether their advantages like privacy, providing it cheaper using kind of a proof of work type mechanism, or actually tokenizing it so that you can own the inference, you can use it in DeFi, you can sell it. I think all of those are very interesting primitives that will get a lot of attention.
Yeah, we just did a small check into a inference marketplace called Antseed.
Oh yeah, I know them well.
They're doing well already.
For sure.
I think they cracked $1 million ARR today. They announced it, which you know, sometimes those numbers are based off monthly or daily or whatever. But so the theme here is the financialization of the AI stack. It's these tradable compute markets. It's perps on compute. It's financializing the inference stack. And so Could you just walk us through like why this is necessary? Like, what is the value of tokenizing compute and having a tradable market for compute? What is the value of like taking inference and like making these things commodity-like instruments in the broad scope of like the macro environment of AI? Like, who are the likely buyers and sellers or longers or shorters of inference and compute, and why does this matter?
Yeah, so I mean, I think there's a lot of questions still, you know, because it's a very early market. But I think what we're seeing emerge is basically there's a lot of uncertainty over, you know, what is the value of underlying GPUs going to be and how is that going to shift over time? Are newer GPUs going to make older ones obsolete, or is there just going to be so much demand that older ones get repurposed for other things? There's a ton of underwriting going into building data centers and lending money for these GPUs. And so that, you know, creates a need for kind of hedging mechanisms. And so I think on the institutional side, you're going to have, you know, the big neo clouds, the frontier labs, the big GPU brokers that want access to kind of ways to instantly monetize this forward demand they're going to be providing. And then I think on the other side, you're going to have big lenders that need ways to kind of like have an actual price market for what is the actual value of the GPUs that they're lending against at any given point. And so I think like what we're seeing in the TradFi world emerge right now is the GPU indices and futures markets. And, you know, companies like Orin, Galaxy is actually an investor in them, Silicon Data, Compute Exchange. I expect over the next year, those are going to really start to pick up traction. I think on chain, the way that I'm looking at it is you have companies that are tokenizing inference. So projects like Venice or Morpheus. You have companies that are tokenizing inference production by doing proof of work to basically make inference provision cheaper. So names there are something like a Pearl or an Ambient. And then you have companies that are trying to make the credit vehicles that lend for buying GPUs more accessible. And so a name like that is like USDAI. And so I actually have a piece coming out in the next few days or maybe next week that talks about this stack and how it's emerging and how it kind of complements what's being built in traditional markets with the GPU indices and futures.
So this proof of useful work concept that kind of Pearl's working on, I've seen some OTC deals get passed around for this. I saw it months ago and I passed, and now it's like tripled in the OTC market, and I'm like, Jesus. So what is the value of proof of useful work? Like what does that even mean?
So I think the idea is like, hey, you have all of these GPUs and they're running inference, right? And Pearl's model here is they say, well, at the same time that you run your inference, you can also just add like one small additional step that also basically is a proof of work mechanism to show that you ran that inference. And, you know, if you win whatever the calculation is there, you win the block and you get a token reward. And what that does is it kind of like subsidizes your inference cost. And so it allows you to provide inference at an even cheaper cost, which allows you to get more customers, you know? So I think it's, in my view, it's a way of bringing down the cost of production for inference. I think where the link is broken right now is, yes, you can give people a token, but it's like if you just give miners a token, they're going to sell that, right? What you need to see is also a demand side for that token. And this is an issue crypto runs into quite a bit. I think there's a pretty easy fix, though, which is basically just require for payment of the inference to be done in that token. And you kind of close the circle. So, you know, it doesn't mean that people need to use the token exactly to buy the inference. It just means if they use dollars to buy inference, those dollars are used to, you know, burn the token or whatever. And then you have miners who can basically subsidize their cost of inference and provide it cheaper. We've already seen some success here. Pearl has a partnership with Together AI, and basically they were saying, hey, we're able to provide inference at 25% cheaper than normal on some of these models because of the token subsidy. Ambient has basically been one of the top or cheapest providers of the Kimi model on OpenRouter, and they're just on testnet right now. But basically with this idea that you have miners compete with each other to provide inference at the cheapest cost. Every inference request is an auction, and whoever provides it cheapest gets that auction. And the idea is they're going to push that auction as low as possible because they're subsidized by the token.
And it completely flips the whole, which, well, the pushback here would be like DPIN tried this and the tokens failed, obviously. But what this does is it flips the whole Silicon Valley frontier lab company game on its head. Because they're kind of, you know, I don't know what kind of communication happens between like the major frontier labs, but there's some sort of like price setting. It's like, if you're going to do that price, we'll do this price, we'll do this one. We're all going to make money. We can still compete, but like, let's not, you know, let's not do this, right? Let's just stay here, right? And we can compete on other factors. Whereas this just seems like it's like, well, I mean, if that's what you guys are going to do, then here's what we're going to do. And the incentive design, if we can get the token right, which is kind of what you were saying on the sell side, then this should flip the entire inference marketplace on its head.
Yeah.
And so it's interesting.
And it wasn't, I would say, even like that a concept that was that plausible until maybe 6 months to a year ago.
Yeah,
when
that's
these
what
open
Jake
models,
from CoinFund was saying here.
They're
He was
really
like,
starting to pick up, right? And then, you know, I wrote a big piece on this last year. You also look into the decentralized training area. And, you know, that is, I think, a much more difficult challenge to tackle. But you've got this really impressive decentralized AI stack that's starting to build out. There's very clear advantages to it. I think, like, as always, it's funny when I talk to some people there, I'm like, I think the big challenge here is like, all right, like, how do you incorporate the token in a way that makes sense or that like actually proves you need it? And they're always like, no, we think the biggest challenge is on like the tech side and actually making decentralized AI work. But you know, I'm not a tech guy. I'm not going to say it, but like, you know, if you look at where a lot of the innovations are coming out of, for example, on the decentralized training side, like a lot of it's coming from Google itself, right? Because they're realizing they need to connect all of these distributed data centers around the world and they need to figure out a way that they can do distributed training. And people are taking those improvements that are happening on the algorithms for their distributed training and applying it to decentralized training. So it's an area I'm very hopeful for. Once again, it's a frontier market, which I think is where crypto always excels. And so that's why I'm very excited about it.
Kind of switching gears here as we close up into Robinhood chain. Two different ways to look at this. One, this is the definition of the concept we call neo-finance. You've got this DeFi underpinning this fully consumer-grade application with millions and millions of users. These guys are going to be doing yield strategies, trading meme coins, cash cat, whatever it is, and they're going to be doing it on basically blockchain rails. They're not going to know it. They're going to think that they're doing USD yield strategies with stable coins. They're going to be getting borrow. They're going to be able to borrow against their NVIDIA stock, and there's going to be a tokenized version that's in a Morpho vault that you can then borrow against. And so there's kind of like this whole like neo finance, like this is what we came here for. It's very cool onboarding of new people into blockchains without them knowing. And then there's corpo chain. This is a corporate chain. This has never worked in the past. Why would this be any different? And they're going to have this initial kind of meme coin craze. Vlad's tweeting about memes, saying RWAs are the future and memes, kind of contradicting himself. And this thing's going to, burn out like a honeymoon phase relationship. So kind of where do you stand on this?
So for me, there's like two different aspects. I think on the one side, there is why is Robinhood doing this? And like watching the event last week, which by the way was a hilarious event, like one of the strangest presentations I've seen.
The world is flat.
Yeah, the world is flat. I think like it was very clear. They said, hey, listen, like we're trying to very aggressively expand our international business, and we're realizing that blockchain rails are the way that we're going to do this. So, I think no matter what, there's going to be a ton of users using the Robinhood chain, whether or not they know it. And that doesn't necessarily mean they're going to be trading memes and stuff. It probably means they'll just be accessing existing Robinhood products but are just using the chain on the back end. I think, the other side is like, all right, is this going to be people that's like building permissionlessly on Robinhood chain? Maybe the meme stuff takes off. Like, I think that would be good. I don't think that's going to be like a huge driver of growth. I think what's probably like the biggest advantage here is people start to like see Robinhood itself as like an open ecosystem they can build on and come up with cool products that helps accelerate Robinhood's own business. And so that leads them to reinvest in it and open it even more. And so that remains to be seen. Overall, like, I think we're past a big positive. We're past like the period of partnership announcements for partnerships.
Correct.
Right?
This is like
this
the
is
chain is
substantive.
live.
Exactly.
Cash Cat just made a new all-time high on the show, and like Vlad's tweeting about memes. Apparently, they're calling Cash Cat the Melania to Ansem coin.
I saw that.
I think that was our friend
the case.
Tulip King tweeted that today. Ansem coin is down bad today after the Cash Cat launch, proving that liquidity once again is simply mercenary and does not care what chain or what token it is based on the opportunity. And
well, I think like this is a great example of like right now what you need to like always keep in the back of your mind is like there's just not really any liquidity. So like the failings of any sort of these tokens might not necessarily be like a failing of the token itself, and more just like it's a very mercenary environment, and in a much more liquid environment you can probably see a lot more of these things win.
Ladies and gentlemen, that is Lucas, the head of VP of research at Galaxy Digital, a crypto AI public company. Lucas, thanks for having us.
Thanks so much for having me.
Thanks for coming. And look forward to the end of this bear. I mean, it's a couple couple weeks, couple months, quarter, maybe. Yeah. If we're following the 4-year cycle, we get another low on Bitcoin in the coming weeks to months, get a period of chop, and then we're off to the races and end of Q4, Q1, hopefully all-time highs sometime in about a year from now. If we're following it to a T, a little bit of the accelerated version.
Yeah.
So
We'll
not
see.
that much time left.
Survive.
Yeah. All right, guys, we'll be right back with our next guest here from Tokenization Tower. Thanks for rocking with us. And let's give Lucas some love in the chat, guys. And let's stop fighting about Cardano. And I know you guys are really bullish on Cardano or bearish, but it's not the topic of the day. So much love.
Thank you.
Money, power, and money, power, and we get deep.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Alrighty, guys, we are back here at the Tokenization Tower for episode number 41 of AI Supercycle, our weekly premier AI show powered by our friends at Near. Visit near.com and near.ai to learn more about their private inference product. We've got Lincoln Murr. Lincoln, welcome to the tower.
Thank you for having me.
Good to have you, man. You are the lead of AI at Coinbase, X402, agents. All of this is happening fast. Just ended a conversation there with Lucas, the VP of research at Galaxy, I think is your friend. And he was speaking a lot about what that is and kind of like why this tokenized inference, tokenized compute market is really growing. So why don't we start kind of here? But before we do, just a quick intro on yourself. What do you do at Coinbase? How'd you get started there?
Yeah. So I've been at Coinbase for about 2 years. I lead all the different AI products. So that's X402, Coinbase for Agents, and Coinbase Advisor. I've been in the crypto space since I was like 11 or 12. I got started because I needed to buy a VPN so I could pirate video games. And the only way I could buy that is by turning a Target gift card into Bitcoins on local Bitcoin. I've been involved ever since. Prior to that, I was doing research at the Ethereum Foundation. But yeah, Coinbase is now the new home.
Beautiful, man. And so this kind of AI crypto crossover has happened very fast. And I think we should start with that's kind of like financialization part of it first, which is this kind of growing desire to have tokenized inference and tokenized compute markets. And we've seen different companies come out of SF that have launched compute marketplaces. And there's this kind of growing demand to basically speculate on compute prices or hedge your exposure via, if you're a data center owner, et cetera. And then simultaneously, there's also this push to really reduce the cost of inference. Right now, we're seeing this kind of like narrative unfold. I think today, Forbes put out an article that was like the headline was like, we replaced all the workers, but AI costs more. And so there's kind of like this drive to lower the inference costs as well. And so you've got these open source inference providers and these marketplaces kind of gaining steam. Maybe just kind of unpack your view on the financialization of the AI stack. We'll start here and we'll get into some more of the product side of things.
Yeah, totally. And in my view, and I think this is something that Sam Altman directly said, which I really like, the whole idea of inference or intelligence is now just becoming a utility in the same way that electricity or water or anything else is. And part of that process is naturally going to be the explosion of its use, but then also the continual decrease in the cost of it, as well as the ability for people to have better piping and infrastructure through which they can buy or speculate or even hedge their exposure to this new utility. All of these financial primitives, or at least a large part of them, exist today for these existing utility markets. And I suspect we'll see this continue over time. But the great thing about tokenization, as we all know, is that it makes it just so much cheaper, faster, more efficient for these markets to exist and for them to proliferate.
Yeah. And so from the product side of things, do you see like marginal improvements from having tokenized compute markets or tokenized inference markets or open marketplaces? Is it a cost thing? Is it an efficiency thing? Like what does it really enable?
Yeah, I think the biggest one and the most obvious one to the vast majority of people that's valuable is just speculation. If you think that the compute resources are going to become larger, there's an ability to speculate on that, where today people can't get access to OpenAI or Anthropic besides some pre-IPO shares of that. It's just a more direct, pure form of speculation, which I think is broadly what we've seen in the crypto space recently, with prediction markets being a great example of that.
Yeah.
Beyond that, though, like if you're a large company and you want to replace, X% of employees with AI, or you anticipate having a bill for compute over the next however many years, you can use these new tokenized structures and whatnot to very seamlessly hedge against that cost go into the millions of dollars per se. Okay. So it's a nice way for people, in the same way that you have farmers who sell their futures on corn futures markets, for larger enterprises and tech companies to sell compute or buy compute to help hedge against issues there.
And so that kind of utility framing is, it's like the way I'm thinking about it is that these kind of like these parts of the stack are turning into like they're being commoditized into like commodities, into like tradable, investable assets, basically.
Exactly. Yeah.
And so that creates a more fair market that is set by the market rather than by, one single company, NVIDIA, or the Chinese version of the chip manufacturers, or whoever creates the GPUs. They set the price because they have the best tech. Well, sure, that can still proliferate, but we're going to have more of a, let's call it decentralized or wisdom of the crowd price discovery for what are going to be the electricity of the future, right? It's that kind of utility based.
Yeah, exactly. And I think we'll see this trend start to continue with the general tokenization or apparent speculation from potentially going from inference and LLMs into maybe entire agents. I think there's this really interesting movement that we've been seeing around agentic trading that's starting to pop up.
Yeah.
And these agents that are running 24/7, they're paying for premium data on X402 to make more well-informed trading decisions, which makes them more money. And it's this nice positive feedback loop. And I could see that also becoming this interesting space where speculation can occur, even if it's on the direct agent itself. Will this agent make money over the next 24 hours? Will it not? That opens up new, exciting markets for people to watch.
Yeah. All right. Well, let's get into the agent side from the Coinbase view. You guys just had a system update event. I believe it was here in New York a couple weeks ago. And there's a big push towards this, I think you guys call it Coinbase Advisor, which is kind of like this more agentic framework for using intelligence to make better financial decisions. Maybe walk us through what your personal view is of how agentic finance will kind of reshape the way that trading, investing, people are using their capital now, and then we can get into some of the Coinbase things.
Yeah, totally. So I think broadly, agentic finance is going to become more and more prevalent until it ultimately just becomes finance.
Yeah.
It feels like we're in the flashlight app, QR code scanner, beer drinking app era of agents right now, just like we had with mobile in the past decade or so. So I think broadly what will happen over time is we start with these more frontier users and hackers who have an agent that rebalances their portfolio for them. Or I can go in and say, I want to invest in space. I don't know how can I do that? And over time, we'll start to see these features more directly embedded into Coinbase and other platforms as well. So that's largely what we're thinking about is how do we support the entire spectrum of users from the most simple to the most advanced to basically have a team of financial analysts that exist and manage their money for them.
Yeah. And do you think that these agents will do better than humans?
I think there's a couple value props. Calling them doing better than humans is a little bit nuanced, but the way that I see it is there's an orchestration gap that exists among a lot of the users where people have ideas that they want to trade on, but they don't necessarily have the time or the expertise to take some broad thesis like, I think quantum computing is going to go up, and then implement that into financial primitives, both in crypto, but also across equities and prediction markets and all these different things. But an agent is very good at taking that and translating it into those actual core primitives and actively managing that position. I've gotten liquidated so many times because I just forget about my positions. But if I had an agent managing it for me, so much easier. So I think in that regard, it will do better because it'll make more people able to express trades in a more streamlined fashion.
Yeah. Okay, so what if we take the human element out of it? And I was telling you about this thing called bot.fun. It's this new app that I saw that's now the second largest user of X402. So they're really, really, really growing. I mean, that's based on their own kind of marketing. But I mean, something to the order of like, tens of thousands of transactions, X402 transactions in a given day, maybe, or a given month. I don't know what the exact number was. And so this concept is like we're taking agents and we're giving them the power to just interact without the human intervention. It's kind of like I think it's like probably provide them a wallet, spin up the agent, and then let them go and kind of do it on their own. Have you guys seen the proliferation of that on Base, or kind of like, is it still human in the loop a lot? Like, when do we take that step of like, here's the money, you're supposed to be smarter than me, you have God level of intelligence, go make me money. Like, people want to know in the chat, in our audience, like, how will this technology help to maximize my portfolio? When do we get that out of the human in the loop stage? Are we already there? And have you seen any examples of this?
Yeah, so oddly enough, we've seen a lot of the fully autonomous use cases come out because this user group that's very experimental is the same group that's very open to speculation in the crypto markets.
Yeah,
so we're actually seeing more people do this autonomous agent trading than we did with human in the loop trading. And I think the X402 piece, you're exactly right, is a big part of it because as I said earlier, you give the agent financial independence on the internet.
Yeah.
And if you give yourself a credit card and browse around, you can do so much more than you could if you were just, trying to read through things and not have any way to pay. But if you give an agent the ability to have access to money, it really becomes a first-class citizen of the internet. And that's really what we're building toward. And one of the things we announced at this showcase was Coinbase for agents. It's like the Coinbase MCP. And part of that is the ability for your agent to plug into its own portfolio inside the Coinbase platform. It can go off, it can pay for things with X402, it can make trades entirely on your behalf. You can just tell your agent to set up Coinbase for agents for me. It'll go find all the documentation and do it. And I think this is kind of the first step toward massive agent autonomy that might take place. But if you're not comfortable with that, we just released the Advisor product, which is actually regulated financial advice inside the retail app that is fully human in the loop. So if you still want to be in control, that exists. So it's a full spectrum of users that are playing around with this stuff. And it's really just a matter of how do we get everyone in some way, shape, or form using AI with trading.
Yeah. I just saw something today that Restream, which is like the streaming app that we use, you can plug it into any LLM via MCP and then operate the app from Cloud or from ChatGPT or whatever it is, and like see all sorts of stats and start stream schedule things. So it's this kind of MCP concept is like expanding the use case of like all of the apps that are possible to use within AI. I want to talk about some of the more current happenings. First is Trump and the government banning or restricting the usage of high intelligence models to the public. So Fable 5 came out, they pulled it back. Then they've reinstated it and was like, it's fine. Opus or ChatGPT 5.6 came out, they pulled it back. Then today I saw something that Trump says that they're basically allowing it now. What's happening here? Is this intelligence that good that it's a national security issue? Should we be nationalizing intelligence as well? Is it a national defense issue? What's your take here? Yeah,
it's fascinating to watch all of this happen, and with the backdrop of however many weeks ago, the whole Mythos Zcash thing as well, where crypto is in a really unique position because all of these smart contracts are immutable, and if there are going to be exploits, if I was a hacker or I had a quantum computer, the thing that clearly is the biggest pot of gold in the world right now is Bitcoin or any one of these smart contracts that you could just exploit and hack into. Yeah. So I imagine what will happen and what we'll see play out is that for the very short term, if Mythos and these other models that are amazing at cybersecurity get leaked to the public or otherwise made available through open source means, whatever it might be, we're going to have this short-term period of just complete chaos where all sorts of different projects and protocols are going to see hacks, both in Web3 and Web2. But once that initial period is over, we're just going to see these models become more of a defensive security set. So before you do any sort of publication of a new piece of code or whatever, you put through Mythos says it's good, and then you're safe, and actually probably safer than you would otherwise be today. But in terms of your question about the potentially imminent nationalization of these labs and whatnot, I imagine that a large part of the speculation around these models' performance today is due in part to upcoming IPOs. If I had a massive company and I could go say, hey, our model is so good that the government is trying to ban it, that's a pretty good reason to buy it.
Bullish, right? It's marketing.
So I think a large part of it is that, and I think we'll look back on Fable and Mythos as the same way we do about like GPT 3.5, which is an exponential increase in the capabilities that we have today, but far from the end state of where we see these things. So yeah, I imagine this will be short-term chaos as with everything. AI is a big boogeyman right now, but there's a lot of space still to grow. Yeah, I heard some rumors that Coinbase got a call from Anthropic before the release, kind of like giving access to it to make sure that Coinbase was all battle tested for security as well. I imagine these large labs, they almost have like a moral or like a business, corporate, commercial duty to private companies to make sure that their stuff is all beefed up before giving this to access to the public. On the nationalization of AI, Anthropic, Google, and OpenAI are all American companies, right? They're typically out of like Palo Alto or whatever it is, right? Is America just dominating the AI race here? Obviously, China has these extremely similar models that are way cheaper, but it's becoming like somehow the AI game, if you will, has turned into USA versus China, which is like everything in this world as far as superpowers. Is America just dominating the AI race right now? And is this a nationalization? Is AI becoming nationalized in your view? So your first question on if America is dominating, I think very clearly yes. I think China is taking probably the best strategy they can, given that being the case, with how they're using or open sourcing all of their models and making it extremely cheap and easy to use for anyone. So I think that is the right approach. If you're coming from behind, you want to go from the position of, oh, we should make these things open, and here's an opportunity for you to get cheaper access to intelligence and whatnot. But for the time being, yeah, America's absolutely dominating.
Yeah.
In terms of your second question around like, should we nationalize? Is that something that'll happen?
Yeah, like Trump wants to take 5% of OpenAI. Or like they want to give 5% to the government or something.
Yeah, you know, it's interesting. I'm not really opposed to it. I think it does make sense from the perspective of aligning interests. 5% of $1 trillion company is a massive amount for the government to just sit on and hold.
Yeah.
But it's not so big that the government is necessarily incentivized to go kingmake OpenAI or Anthropic in any sense.
Yeah.
So, you know, it's interesting. It's the same thing that happened with Intel as well. It feels like we're entering an era of sort of nationalization of these companies, providing better alignment when the government can be so helpful to them. My big concern, though, would be that if the government is aligned with OpenAI and Anthropic and lab number 3 comes out, maybe Grok, SpaceX, whatever it might be, is there now a reason to support that lab on the basis that they're an American, Elon supported, and he generally has the best interests of the country project? Or are they going to side with Anthropic and OpenAI because they have 5% of equity or whatever?
Yeah.
So that to me is going to be a pretty interesting thing, and see how that plays out over time.
Yeah. Interesting. So so Fable 5 is free right now. They extended their free period, I think, until like July 12th or something.
Yep.
And so people are like really gung ho about how smart and intelligent this thing is, and just how great it is. And what you can do right now with your OpenClaw is you can just go download the Chinese version of Fable 5 or of the most premier intelligence, and it's almost like advertised as like 95% as good for 5% of the cost. Is this a problem? Like, is AI, is China going to pop the AI bubble that is happening right now? Like, what is your view on the price of inference as it pertains to the quality you get with American models versus the price as it pertains to the quality you get with the Chinese models?
I think it's quite ironic that these Chinese models are actually providing the capitalist incentive for intelligence to be proliferated across the United States in a pretty meaningful manner. To me, I think it's totally fine. Like, it just means that Anthropic and OpenAI are going to have their backs against the wall, continuing to innovate. And if we are truly the leaders in AI, then it should become very apparent over time that we have the best models.
Yes.
It's not going to be something that China is able to keep up with. And even if they are, I think the biggest concern is around all of these data centers, spin commits, all these different things that are happening right now. And did those bubbles get burst if open source models continue to keep up? Broadly, I think so, but there's such a massive stack from end to end in terms of chip making and data centers, and even like the utilities, water, electricity that are required for these models to run. Even if inference gets way cheaper, I could still see that helping the US, because you're going to want American-owned, on American land data centers to run those models. You're never going to outsource those to some data center in Beijing. And broadly, I think it would be helpful for 100 times more as many companies that have access to frontier intelligence today to get that access.
Yeah, it's just interesting because when you do run when you run things through Cloud Console and the API, the amount of spend that you incur on any premium model on an Opus is insane. Like every Telegram message that I send to my OpenClaw is like 10 cents, 20 cents. It's like, what are we doing here? You know? Then you pull it into like the Kimi model or whatever, and it's like a cent. It's just like drastically different.
Yeah, and I imagine too, for the whole trading use case as well, this will start to become a pretty interesting piece where these models are going to start performing differently. We're going to see models specifically tuned for trading. I've been playing around a little bit with Fable and having it kind of like rebalance my portfolio for me and whatnot. It's great at it. And, you know, given it's managing $1,000+, it's actually still pretty cheap overall compared to what it's providing for me. Instead of me paying $2 and $20 to some financial advisor, I can do it myself and pay a couple bucks a day.
Guys got size, $1,000. What about data centers in space? Or in the ocean? There's a couple startups doing both. How realistic is it to put data centers in space?
I think every moonshot goal sounds absolutely ridiculous when you first start with it. And I think that one too is looking 20 years down the line and making a lot of assumptions about how AI continues to grow at an exponential rate until then. If we get to the point where we saturate the amount of space available in the US, or these, you know, protests and conflicts around data centers in people's backyards, if that really reaches a boiling point, I could see that being the case. But it would require such a lift, both in terms of the cost to get these things up there, but also the value that they'd have to provide, that I would be surprised if we see that in the next decade plus.
Really? Yeah. Yeah. So I saw Blackstone pulled out of a large data center deal recently. It was massive, and now that data center is kind of in trouble in terms of like getting the funding to finish the job. And so, do you just with that in mind, like, do you think that this conversation that we're having about inference, like, do you think that we're going to see kind of a return to cheaper costs and like less production in the AI world? Like, it seems like it's a never-ending, decade-long plus build-out happening, but it feels like right now we're kind of in this phase of like everyone was token maxing. Like, we were like, let's spend all the tokens, like give your employees unlimited tokens. Everyone needs to just use AI. And then now it's kind of like, well, let's not use it unless we have to and it makes sense. And then so this kind of like shift, even though it's happened relatively quickly, the last like quarter or so, it is affecting now some people's outlooks on the amount of CapEx and you know how much spending that they want to invest into this industry. Do you think that this kind of re-centering of reality in terms of like how to best use these tools could affect like the investment landscape broadly, or like these IPOs? Just, you know, give us a sense of like, you know, ground us here. Where are we truly at?
Yeah, I think it's still so early in terms of the AI rollout that even if these cheap models ultimately win, which seems like they will for most use cases, there's still so much adoption that is yet to occur that the general market isn't necessarily seeing the types of payment volumes that we may see or inference volumes that we may see in the future. Like, to your point, the vast majority of companies in New York and SF have adopted AI, but there are a ton of companies in Middle America and globally that have yet to even understand what Claude Code is, or they just have just now heard of it and are just getting started with it. And all of those places that have yet to see any real traction or adoption of AI are still sort of yet to be disrupted. And whether that comes from Fable and Mythos, or whether it comes from GLM and Kimi and some of these other Chinese models, there's massive amounts of tokens to still max.
Yeah. So just kind of circling back to Coinbase as we kind of come to a close here in a few, what is the future of Coinbase's AI rollout? Like, what is the grand vision that, you know, you talk to Brian or talk to Emily and you're like, here's what the Coinbase AI product vision is going to be. What is that? What is the kind of broad end game there? And how does that look like in the scope of fintech applications or, you know, kind of like consumer grade investing apps?
Yeah, so broadly, the goal is to make Coinbase the backbone of the post-AGI economy. And really what that means is that we think there's going to be a proliferation of agents across the internet. All of those agents are going to need to have financial accounts in order to exist as a more autonomous entity. And we want that to exist on Coinbase. We have the Coinbase for Agents product to give those agents their primary financial account. We have X402 and Base and USDC, all to provide the settlement layer and rails on which internet native microtransactions can happen at billion plus transaction scale. And we're doing all of this in a way that both is aligned with a lot of the enterprises that are now adopting and using X402. Like, I don't know if you saw Cloudflare is now allowing, and they, you know, gate 25% of the internet to pay per use with X402 if your agent wants to go crawl for a website. So we're seeing this shift happen and we're meeting it in real time while also trying to get to this broad vision of, if there's a product on Coinbase that exists, your agent can use it. If your agent is going to be making a payment, it's going to have something to do with the Coinbase stack.
And does that require like a lot of like rewiring of the product that has been built for humans? Because people often say like crypto was built for robots. Crypto was built for agents. So like the underlying tech of like zeros and ones and transaction hashes and addresses, it's not really appealing to the human eye, but that doesn't really matter for agents. It's just a synthesization of information rapidly and then gives you an output, right? So it can really rapidly, you know, digest this. Whereas humans, you know, you check the address like 10 times. You're like, all right, let me check it, you know? Yeah. So the product side, what needs to change? Like, what does that change look like?
Yeah, the analogy I've used, and I might have already said it here, is like the 2010s, we saw web to mobile was the big story. The 2020s are being defined by mobile to agents. Okay. And that's both a shift in terms of like UI and user experience and how you're interacting, but it's also critically important because these agents, as a byproduct of being able to act fully autonomously, there's going to be a substantially larger number of transactions happening. So there's a little bit of retooling that has to happen in terms of like, how do we take something that exists in an iOS app today and make that exposed and externalized to an AI agent that's interacting in Claude or OpenClaw or whatever. But broadly, we have the rails and we have the tools to do it. And it's just a matter of some slight reconfigurations to make it all safe and friendly to agents.
Beautiful. Man, I mean, any closing thoughts, Lincoln, on this kind of convergence between blockchain and AI, where you see a lot of value being captured, you know, where you see a lot of room for improvement, what specific areas you're excited about in this kind of broad convergence? Kind of just close us out here.
Yeah, I think we've seen a lot of legitimization from large enterprises, AWS, Vercel, Cloudflare, Stripe, all adopting agentic payments on crypto rails. Yep. But we have yet to see a really clear demand side piece. So until the average consumer is making micropayments with their agents or doing these transactions, which ultimately I think will happen entirely behind the scenes, there's a gap to be filled. And I think there's a massive opportunity for builders out there to build the tools and the infrastructure, and most importantly, like the consumer-facing apps. It's the exact same problem we run into in crypto in terms of we need more consumer stuff. We need things that people are going to play with and use. That to me is where I think there's the biggest opportunity coming over the next couple of months and years. And I think broadly, payments and trading are going to become the biggest use cases for AI interacting with money in the next 6 to 12 months.
Love it. Ladies and gentlemen, that is AI Supercycle episode number 41, powered by our friends at Near. Visit near.ai to learn more about the private inference tool. Lincoln Murr, the head of AI product at Coinbase, live from Tokenization Tower. Lincoln, thanks for joining us. Great to have you here.
It was a pleasure.
And guys, we'll be right back with our next guest, some markets, some charts, and some conversation about what's happening out there. Don't go anywhere.
Money, power, I'm money, power, I'm we get deep.
get deep. We get deep hard. You know we get deep. We get deep hard. We get deep. You know we get deep. We get deep hard. We get deep. You know we get deep.
Ladies and gentlemen,
There we
Freedom
go.
Guy listening while driving.
Oh boy.
So, we're hearing rumors that Cash Cat is the Melania to Ansem. Robinhood chain is on.
The Melania to Ant.
The Melania to Ansem's Trump. Ansem flipped Trump.
That's wild.
I know. So, I mean, guys, there's a lot of lines going on here, but we pretty much rejected from where we needed to reject from. And
What
now
is
we
this?
got to get a bounce.
Whose lines are these?
We got to get a bounce here. Our boy, Hype, looks still great. Just consolidation, higher lows, respecting our lines. Purr's on its deathbed right now.
Oh no.
My God. Zcash, little consolidation. Lighter, low consolidation range forming. Arrow took a big dump. Should be all right. Still looks good. Still looks good above our levels. Looking pretty good. Listening while running a grader, much funner. Yes, even Darth Vader needs to go to the dentist sometimes. There you go, Freedom Guy. So, Rob, I mean, we had a pullback, obviously. But I think our summer bounce continues. I think we got
But you're
at
of
least.
you're of the mind that we make new lows before the cycle continues.
Yeah, I think that's the consensus view, honestly.
But are we going with the consensus here? We thinking
you tell
outside the
me.
box.
I don't know. What are we doing, Rob?
I don't know. It just seems like everyone is like just 3 to 4 more months and one leg lower, and then it's off to the races.
Yeah, it sounds about right to me.
I don't know. I mean, that's kind of what I keep hearing people say. And typically, when there's that view, and it's like everyone is like, "All right, I'm gonna wait for this one more dump, and then I'm gonna go buy." It's like maybe we don't get that dump.
Rob, you've been bullish since 112K.
I'm a optimist. I am.
You've been bullish since 112K, man.
Yep. But at 120, I was bearish. Bitcoin got to 124.
I know.
So
I know.
insane. So
I know.
insane.
How about stocks, man? What are they doing out there?
You didn't participate in our daily equity segment today, but Eric Balanchunas says that the stock market is now too big to fail. Not only that it's like big and dominant and continues to accelerate and just, gets bigger and bigger, but it actually has reached the size of systemic importance to the extent that it will get bailed out by the Fed in the case of a bear. And so,
Okay.
Obviously a lot of people own stocks, but he's actually calling for, in the case of a bear market, it's not just big and people get affected, that the Fed actually comes in, prints money, lender of last resort, same people, same entity that bailed out the banks in 2008, comes in and bails out the stock market if it gets too far down.
Dude, Canton, our 15-cent coin,
stable coin,
has officially 15-cent stable coin is officially broken down.
Yeah.
That range is no longer.
Yep. It is no longer a stable coin.
Yep. No longer. We'll see what happens though.
This thing was just so stagnant and
I
did
know.
not get affected by anything.
I know. And then it randomly dumped when the market was bouncing.
Going up, yeah. This is just, the supply control on this thing is so weird. It moves totally asymmetrical to everything else. I like the fact that it's uncorrelated from everything else, but there's obviously shenanigans, insider deals that are being done, tokens in exchange for super validators that if you understand or know about these deals, then I'm sure it's a great thing to trade because the supply is so tight. But
Yeah.
and it's uncorrelated, but you'd have to really be on the inside tracking governance forums in the Discord. Like you'd have to really, really be in the trenches, in the Canton trenches to trade it effectively.
Looks like Lighters came out with some latency engineering. It's end-to-end transaction processing dropped from 280 milliseconds to a flat 55, which is quite literally under the reaction to the human eye. There is quite a bit of technical things here. And yeah, you can see that the end-to-end latency engine, you see, they call this jitter when you get these spikes in latency. And you can see that the latency spikes have just completely subsided. And so it looks like they removed deep copy elimination and allocation fixes have been deployed. And boom, jitter's gone. And the API layer is far more sustainable.
Very cool.
Wow.
What is the lighter to hype ratio looking like these days?
Yeah, I mean, that is my bull to bear. That is my current bull versus bear sentiment. And so what we saw was this massive, wait, is this right? There's no way this is right. No. Yeah, this is right. So I believe.
What are you looking at?
No, this is not right. I'm trying to get the hype lit ratio. Sorry, you can you can do like two different pairs on here somehow.
Like denominate one asset against the other.
Yeah. And so you can see that like here, Lighter really started outperforming hype. Right? Only up 59%, Lighter up 100%. But then as soon as we get the market getting scared, Lighter drops significantly and Hyperliquid still drops, but I don't think as significantly.
I mean, this isn't just like that spurt of outperformance is just a signal of like a re-rating. That was just a one-time.
But I
event,
also
and
think
these things are relatively correlated, track one another.
But I also think that in periods where, like Sol and ETH, when in periods where Bitcoin and the market broadly is more bullish, more risk on, people will be buying Lighter more than hype, and it will outperform. That's kind of my take.
So like higher beta.
Yes. And then in kind of scarier environments, people are stressed out, not sure about the market, they'll probably sell off Lighter harder. But maybe that's changed. But I don't know. We'll see. Lighter's down less today after being up more. So
I think that's just the case of like something's a smaller market cap in the same category. They're going to be correlated in the same category, but one is a higher beta play of the other.
Yeah.
Because
I
it's
agree with that.
Smaller market cap. That's general rule of thumb.
Yeah.
Yeah, we're going to see. I mean, if we do get, I don't know. I might be in the camp of like, we're not going to swing the lows. Maybe we swing the lows. I just don't know if we make new lows.
Our MNAV on per is just under 1 now.
I'm
upset. Definitely not what we needed to see.
Let's see. Things are bouncing a little bit.
They're up almost $1 billion.
Who's up?
Hyperliquid Strategies.
Okay.
Isn't that crazy?
Pretty cool. Good for Seamus.
Crazy. Alrighty, guys. We've got Curve Mike in the back, Stabled Up, episode 40. Our lovely host, Rob, is going to host Stabled Up Curve Mike. And
oh, you're not sticking around for this one?
It's going to be electric. So
where are you going?
I got some things to do over here. I'll be back after this guest and the Paragon guest.
You coming back to close out the show today?
Yes, sir.
All right.
Let's pass you over to Mike. Guys, stay tuned. We'll take a quick standby. We'll get Mike set up. We'll get you guys set up, and we'll get the Stabled Up show started. Let's get it.
get deep. Deep, you know we get deep. We get deep. Deep, you know we get deep. Deep, you know we get deep. We get deep. Deep, you know we get deep. Deep, you know we get deep. We get deep. Deep, you know we get deep. We get deep. We get deep. We get deep. You know we get deep.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show. All right, we are back with our weekly stablecoin segment presented by Frax. Today, we've got Michael Egorov of Curve. He's been building in the space for a number of years. Curve was one of the OG pioneers of the stablecoin space. It's an absolute pleasure to have you on the show today, Michael. I'm excited because stablecoins feels like one of the few industries where we have a super cycle going on. I'm talking about tokenization, talking about prediction markets, talking about perps, but it feels like the industry itself is kind of underpinned by stablecoins. You're a leader in stablecoin infrastructure. Curve has been around underpinning stablecoins for a long, long time. You're also very, very technical, so I'm excited to get into some of the depths here. You've got yield basis as well, which is a little bit of a newer project, but today I think we're going to focus a little bit more on Curve. And so, you've spent 6 years plus developing liquidity infrastructure for stablecoins through Curve. We were very in the weeds when Curve was originally getting built. It was among the DeFi Legos, and it was, specifically for stablecoins. Maybe you could talk us through some of the more, recent advancements in stablecoins and Curve. I also want to get your opinion on the open US dollar, that consortium stablecoin that we heard. Maybe we'll start there. I want to make sure that we get your audio situated here. Leo, just tell me, are we good on audio? Okay. Right. So Michael, why don't we start there? Obviously, Circle and Tether have been, kind of the leaders in this space. Curve, obviously, as well, in this space, more on the liquidity infrastructure side. Maybe you could just give us a little bit of a primer, on your take on stablecoins. Where are we at today? And I want to get your take on open US dollar.
Right. Yeah, so today is somewhat different from what it was in OG times. In OG times, we had a lot of experimentation happening with fully decentralized stablecoins, or maybe not so decentralized, but I would say in some ways algorithmic, right? Like even collateral debt position is algorithmic, and it undeniably works. There are quite a few today, but yeah, so some stablecoins are like that, and some stablecoins are redeemable, powered by deposits somewhere. So Tether, USDC, and newer stablecoins like PyUSD, USDG, and whatever, right? And I think most recently we have mostly a lot of push with redeemable stablecoins, because many players started realizing it's probably something good to participate in, but at the same time it's not easy, because there are existing players like Tether and Circle you mentioned.
Yeah, absolutely. Tether and Circle, redeemable stablecoins. Algorithmic stablecoins were sort of like, the big thing. We obviously saw what happened to Terra, USDT, Terra USD, and this had some fundamental mechanism design flaws as a part of it.
Yeah. Not only that, yes.
Yeah, absolutely. There was plenty of shenanigans happening with Terra. So as we're thinking through like the mechanism design for stablecoin infrastructure, as we prepare for institutional liquidity to come on chain, I think that is what we're seeing play out. We're seeing the likes of JP Morgan, banks, financial institutions.
Right.
Everyone is thinking through tokenization, and stablecoins are a very fundamental part of tokenization. Can you give us maybe an update on how Curve is tackling stablecoins in this more maybe modern stablecoin era?
Well, originally what Curve was designed for is to swap between stablecoins of the same denomination. That was what it started with, right? And it was, well, the need was clear. There was stablecoin like DAI, for example, which is decentralized, and you would want to exchange it to USDC or USDT to essentially withdraw to your bank account or whatever, or doing the reverse as well, right? Today it's more like exchanging between redeemable stablecoins, but with the same algorithm it works, and basically this infrastructure plays a role of some sort of bridge connecting different stablecoins. Maybe some stablecoin redeems better in the US, maybe some stablecoin better redeems in Europe or in Asia, or maybe, I don't know, maybe there is something special in New York like BitLicense and you need another stablecoin. And Curve essentially underpinned liquidity between all those kinds of stablecoins all the time. But that's a part of Curve, right? We have multiple things going on, but this is probably the earliest, like something Curve started with, and it's probably still the biggest part.
Yeah. Okay, and now another part of the stablecoin world that has been sort of the subject of mixed opinions. I've heard people say that we're going to get non-US dollar denominated stablecoins. It's going to overpower the US dollar portion of the market, and then others say there really is no reason for non-US dollar stablecoins to exist, and the FX market is essentially dominated by the US dollar. I also want to talk to you about Forex. What does it look like when the Forex market is brought on chain? Is there a reason to tokenize and create non-US dollar stablecoins? Where do you stand on this issue?
Yeah, well, that's interesting because this process of tokenizing non-US dollars stablecoins started pretty early, still in OG times. I think it was Stasis Euro S to essentially as a first Euro stablecoin, but a few others appeared, and they are useful, I must say that. And maybe more useful is not something like Circle's EuroC. EuroC is great because it's supported in multiple exchanges, but indeed when you go on an exchange, maybe you don't really need that kind of stuff. But there are stable coins which you can redeem directly to your bank account, like you have Euro stable coin and redeem it to IBAN, and there we go. There are a few like that, like Monerium, for example, and they also exist for quite some time. But what happened most recently? Fintechs appeared. Fintechs which essentially made crypto cards. And they do have this FX need, right? And it appears that FX they can get is not always good. It's okay, but they can do better, right? And they started using these. Just started, so it's not a big use, but it's notable. And I started noticing demand on chain, like real demand, which is kind of powered by these fintechs, real demand to exchange between euro and US dollar, for example, or Swiss franc. There is a Swiss franc stable coin, which you can sort of redeem franken coin, and I did use that quite a bit to pay bills. It works, and yeah, you just can go on Curve and buy it and pay bills, and it works. And this whole process appears to be, well, because it's all on chain, appears to be actually faster than what I do in banks for some reason. For me, it's more convenient. For crypto natives, it will be more convenient as well. For people who come from USD world to pay in euros, I don't know. But it does seem to be sometimes more economical. But here is the thing. I actually calculated how much will it take to get FX happening on chain. Like if you do it, I don't know, if you do a big push for that, what should it be? It appears that, well, you need to get access to markets with a very, very small spread. Well, not you, but arbitrage traders. So they will have to buy on chain, redeem, swap in some, some external markets, and arbitrage back to the chain. So what sort of spread should be there? It appears that spread, which for make that working, should be just several bips, very, very small. And these spreads are not usually available to anyone. They are available to banks, but minimum amount to trade is big, like, I don't know, $1 million or something. So pools on chain should be fairly huge to power that, like probably hundreds of millions or $1 billion, like really a little too big. So it didn't happen. It didn't happen as a big push, right? But that's only true if all your trades are arbitrage trades. If you have real demand, then you can have very small pools and they will do the job. To have real demand, you need to have real users who do that, and real users started appearing, these fintechs. So I'm very optimistic about FX moving on chain, but it will not move like, with banks doing tokenizing things and then doing big FX push on chain. It looks like it's happening the other way around, from small to big. Right? And so I think we will have some years of growth of FX on chain. It's hardly noticeable today, but let's see what it will be in a couple of years.
Yeah, I've been sort of thinking through this thesis out loud on this show, and I'm curious as it relates to FX and just generally whether you seem to agree with it, which is that the consumers are really, they have their consumer behavior ingrained in them. When we go buy a cup of coffee or really anything these days, we just tap our card, and the way in which this gets presented to us is just a number on a screen. This number is how much money I have in my bank account. I tap my card and the number gets smaller. That money ends up in the merchant's account. Their number gets bigger. Right. Behind this number in my bank, they have 5-year treasuries, 10-year treasuries. They have mortgages in this person. They have bank deposits. They have assets and liabilities. They don't show any of that to me. And so from my perspective, everything is just this number, and I have my consumer behavior is just tap this card, number gets smaller, get my things. Merchant, same thing, except their number gets bigger when I buy the thing. My theory is that all of this can stay the same. I can tap my card, I can see the number, everything behind the scenes. It can be the bank that determines, okay, 5-year treasury, 10-year treasury, stable coins. Before, there was no stable coins, but now they can choose to hold on the bank's balance sheet, hold on their balance sheet, stable coins right next to all of these other assets, mortgages, liabilities, assets, and they can still just show me the number. My consumer behavior never has to change. And so to consumers and to merchants, we've been thinking through this about how people are going to adopt stable coins or point of sale systems and all these things none of that has to change. It can be up to the banks that are custodying a lot of these cash assets to choose to denominate their balance sheet in stable coins. And from the consumer perspective, everything stays the same, except money gets into the account faster. The ups and the downs, the processing, when we see pending transactions, it just takes less time for it to be processed, and maybe it's cheaper in fees. Everything else can be done by the bank through the settlement of transactions, up to them as far as how they denominate their balance sheet. I'd like to get your do you see, like, is this the right way to think about the adoption cycle of stable coins in 2026? And maybe we can also think through later about how this applies to the foreign exchange market.
Yeah, possibly this is right, like integration of stablecoins as infrastructure, right? But also, well, as a user, I only put stablecoins in my cards today. I don't use bank cards. I use these cards which are filled with stablecoins. So I just send stablecoins there. That's more convenient for me. But I'm crypto native. There are a few other crypto native people like that. But yeah, it's quite possible that all this stablecoin stuff, that it could happen actually outside the financial institutions, that maybe users will hold stable coins, right? And maybe it will be only like entries and exits and point of sale terminals and stuff like that, which is processed by financial institutions.
And I often have this thought when I'm thinking about the adoption cycles of new technology. Sometimes it feels like an evolution, which is a bit more peaceful. Other times it feels like a revolution, maybe a little bit more violent, right? And like people do change their consumer behavior, right? The peaceful evolution feels a little bit easier. Maybe it takes a longer time frame, but it happens slowly and somewhat easily over time, maybe without us even noticing. Whereas the more violent revolution is, there is a reason for you to change your behavior and choose to use stable coins rather than the banks doing it for you. Obviously, yourself, you're an innovator or early adopter in this world. You've chosen to put stable coins onto your cards and use that in your everyday purchases. Do you think most people are going to take the revolutionary approach and do the mental work to choose stablecoins, or do you think
they will choose stablecoins only if they have problems not choosing stablecoins? I think, like if they have problems with banks, like banks being too slow, or banks not opening bank accounts for them, or something, they will use stablecoins. But if they don't have any issues, they probably won't.
Right, and so a lot of people on the show, they come on, they say every asset will be tokenized. Digital assets are every asset. And if we do end up with every asset on chain, eventually all of those people, they will have their assets on chain. Do you think the majority of people are going to be taking this revolutionary approach because banks have a lot of problems? Or do you think banks will figure it out? They'll figure out that this technology is important and it's inevitable, and they will implement it for people on their behalf before the people end up migrating off and doing it themselves?
Well, I think it will be sort of hybrid, because you still do need to interact with the real world, and this is where banks will probably inevitably take the lead. So people probably will use this, this infrastructure a little bit more directly, or packaged into some more kind of trustless products, but you still need the old good players to interact with the real world.
And how does Curve fit into this? Like, every chain and company and application these days seems like it has this institutional strategy. Like, how do you see institutions using Curve for stablecoin settlement and execution maybe differently than consumers might use this protocol?
Yeah, I think with institutions it could could be that FX is a right angle actually. Otherwise, institutions, they actually had quite a bit of problems using DeFi. They would love to, but they are not allowed to do it easily. And these barriers, they disappear not immediately. It takes time. I think if you open the floodgates at some point, that will work. But since these floodgates don't disappear immediately, right? Then some services are being built to interact with blockchain directly, and institutions still take their part. Like, for example, you can deposit stablecoins in a bank in Switzerland, with many banks actually already, and that actually will work. But whatever you do with a stablecoin, like maybe, let's say, I don't know, I want to buy stocks with stablecoin, and maybe for me it's easier to go on chain if they are traded on chain and do it than to go with my bank, and I don't even know what should I do to do it. It's so unclear, I would say. Well, if you are in the US, it's fairly easy. You go to, I don't know, E-Trade or whatever, and buy it fairly easily, or whatever you do. If you are here and you want to buy American stock, I don't know actually where to go. So, and with crypto, it's kind of, I don't know, it's easier. You have the whole world open to you. No registration needed. Just you have your wallet and you go.
Yeah, and part of the access that we have once we have this wallet, we essentially have global access to all of the assets that are on chain, but we need those assets to be on chain to begin with. I've said on the show, and I like this. I'm curious what you think about it. Like a dollar that's on chain tends to stay on chain, and a dollar off chain tends to stay on chain. The friction is when we try to cross the bridge. Now, in order for us to do that and us to get access to all these things and the world open up to us, we need all of these assets to be on chain to begin with. And equities are a great example of this because, in order for us to get access to equities, we first need to move those on chain. And it feels like stable coins are kind of the gateway, right? Initially, the first thing that we got tokenized.
Stable coins are the gateway, absolutely. And if stable coins of non-US dollar stable coins are more convenient for some locations, yes, probably another potential gateway. But yes, absolutely. And tokenized assets, they can have lots of benefits apart from access from being on chain. Like you can have innovative products like yield bases built on top of those, right? Why wouldn't you be able to earn yield on your stocks even if they are not producing dividends, right? So what if they are not dividend stocks, but you still have them increasing in one or other way, right? So maybe it's not just buying and selling. And that's interesting. That's what DeFi is about.
Mm-hmm. Yeah, and yield basis is a great example of this, making an asset productive even when, like you're saying, it's not paying dividends.
Like Bitcoin.
Exactly. Bitcoin is a great non-dividend producing.
And Ether kind of pays dividends.
Yeah, it does. It does. Michael Saylor could certainly use it to his benefit these days.
Absolutely.
We're continuously seeing this. We're seeing the adoption play out. FX is coming online, but it has this friction between the fiat system and the on-chain system. Once we are in the on-chain world, we have all these assets here. Access is open. It's much more seamless. Have you considered moving taking Curve into a position where it's able to facilitate a fiat cash leg? Like famously on Curve, you have these tri pools and whatnot, right?
Yeah.
All of that is smart contract enforced. and it makes it, you know, codified. But the hard part now, and I think the hard part maybe a few years ago in 2020, 2021 was exactly this. We didn't have the on-chain primitives to underpin a protocol that was able to facilitate the trading between these stable coins. And we needed that. Now it feels like the hard part is like, it's almost like the non-technical stuff. It's like the boring regulatory, the boring, like, you know, like paperwork that is required when you're working in like the off-chain world. It feels like we've got like a lot of 0 to 1 in the on-chain world, but now the most inefficient part, the part that needs the innovation, is like the on-ramping. Because once we have it on-chain, we have a lot more infrastructure built out. Have you considered adding like a fiat component to Curve?
Yeah, I thought about it, but you know, I think that maybe people who have more experience in that boring part should be doing the boring part, right? So there are plenty of things which are not completely solved in the complex world, right? So impermanent loss being one, but FX is not quite solved. I'm hearing from these gateways essentially, right? So we've got this euro, right? We can change euro to dollar using banking, but we are finding that inefficient. We want to do it on chain, but where is the liquidity? We want liquidity, right? So this needs to be properly solved. This is a problem, right? So they are really telling that. And I think, yeah, so infrastructure part is not quite solved. We have something, but not everything. And yeah, of course you can do it like, well, you can do it in an almost order book way. You can hire market makers instead of centralized exchanges. They do market making on Uniswap 3 and whatever, and it will sort of work, but like it is actually less efficient than it can be when it's fully automated, I believe. Yeah. Right? So automatic market making is not yet fully solved, right? And we have plenty of work to do.
Got it. Yep. And there's pioneers out there that are working on this. And so what I'm hearing is, you know, right now you've got this euro to US dollar, you know, Forex industry that is to the tune of billions, if not more, you know, every day, every week. And so bringing that on-chain is more efficient. Can we use the same infrastructure, like, you know, to go from euro to USD? Is it as simple as going from, you know, Frax to Curve USD to on-chain assets once they're tokenized? Or
that's the idea. It's not as simple algorithmically, though. It's actually harder technically, but it is possible to do it, to feel it that simple, right? It just, well, it wasn't fully figured out. So it's quite a bit of research which is needed. But this research probably would have happened earlier. On Curve, I did make pools which support euro back in, what, 2022 or something, right? But these were not quite well optimized because there was no demand almost. But now the demand is picking up, and it's not just what we see, it's even those companies are even asking, what can you do, right? So this started happening, and demand is finally there, and we need to actually optimize these things, and this will inevitably happen.
And could you give us a bit of a clue as to what optimizations can be done? Like, where are you focusing and spending resources?
Right. So in this particular area, it's all about how you manage your concentrated liquidity. First, automatic market makers like Uniswap 1 or 2 did not have concentrated liquidity. Curve, from the very beginning, did have concentrated liquidity. Probably it was the first AMM with concentrated liquidity. But it was concentrated at around one price, $1, right? In 2021, I made CryptoSwap, which essentially automatically managed concentrated liquidity. But for like very volatile pairs, it was given an advantage, but you still would have this impermanent loss issue, so not so interesting. For euro to dollar, right? For euro to dollar or Swiss franc to dollar to euro, right? For these currencies, prices don't change that much. So liquidity in principle can out-earn the impermanent loss, but you do need real demand, and it just got here. Now, the tricky part is how do you manage this concentrated liquidity? On Uniswap 3 and 4, you have market makers essentially moving these ticks around, right? And that is a lossy process. And even in curve pools, like curve FX pools, it is also a lossy process, but pools themselves, they measure losses and manage it. And by the way, the same kind of pools apparently underpin yield basis, right? So yield basis is using that, and well, it's removing impermanent loss, but to actually earn, you do need concentrated liquidity, and concentrated liquidity which is automatically managed. And this is what we do. And a lot of research is focusing on how to manage concentrated liquidity automatically in a way which is actually like maximizing the returns. And I think we are doing fairly well here.
Okay, so it's all around the market. The market makers. It's the active management of liquidity, the concentrated liquidity, where it's positioned,
right. And we are trying to do it without market makers, right? So it's automatic market makers, like you have smart contracts doing market making without market making firms. And actually, for market making firms, it probably doesn't even make much of an economic sense when it's small to do market making for FX. Because let's say you have all these fintechs, but like FX market making, just like stablecoin market making, is not not necessarily lucrative, because even if you measure those fees over that small scale at which it is happening at the moment, it's not necessarily interesting. That's what actually centralized exchanges thought about exchanging stablecoins to stablecoins until Curve appeared. When Curve appeared, it appeared that actually exchanging stablecoins to stablecoins, even USD to USD, produces enough fees to feed the demand of people to earn something, right? And well, it grew up to what Curve is. The same thing can happen with FX, I think, but it's just not going to be that quickly growing. Or maybe it will, but not yet. Right, so there are some season effects here, I think, as well. At the moment, we have sort of slow natural growth of this area, but it's actually happening finally. And maybe at some point it will become explosive growth. I don't know, but we need to work on these things now.
Yeah, well, stablecoins are a foundational pillar for everything else that's happening on chain. And so we need this infrastructure. We need these protocols to work. Michael, thanks so much for joining and taking some time today, as well as all of your hard work in the stablecoin space and helping to underpin our industry as a whole. Always appreciate it. Guys, check out Curve and Yield Basis, and go give Michael a follow on Twitter. He's always pulling up some good stuff there. Thanks again, Mike.
Thank you.
We'll see you next time.
Bye.
All right, guys, we're going to do a quick standby, and we're going to get into our next segment. That was our stablecoin segment presented by Frax. Frax as well has been in the stablecoin game for a long, long time. And Michael from Curve helps us understand what the Forex market could look like on chain. Again, this is an industry that is so small relative to the Forex market globally. If you believe in stablecoins, which we do, then it makes sense that more Forex is going to come online. It's going to slowly start to eat into the market share of Forex off chain. This is a $10 trillion industry every single day. So there is significant fees to generate here. And here on the show, we believe that the re-rating of DeFi is happening right before our eyes. More assets are coming on chain. Stablecoins are a big asset class of that. As these assets move on chain, they end up flowing into these DeFi protocols. More assets in these protocols means more activity, which means more fees, and value for you as token holders. So that is happening right before our eyes. Guys, thanks so much for watching Frax and our Stable Up segment today. That was episode 40, and we're going to keep things moving. Let's do a quick standby. Don't go anywhere. Be right back after this. Taha, welcome to the show. Good to have you, man.
Hey, thanks for having me. I'm doing well.
Yes, sir. Yes, sir. Big Hyperliquid bull here. Founder of Paragon, one of the HIP3 deployers, trading across different asset classes, indices, and more. Obviously, we're big Hyperliquid bulls in the show. Been in the ecosystem for quite a long time. Early buyers, 2024, and just been excited about what's happening here. What's your Hyperliquid story, Taha? How did you get involved? Welcome to the show.
Yeah, thanks for having me. I've been around the crypto space for some time now. Like a lot of folks, started in TradFi, made my way to Solana, ran a product studio for some time, focusing on validators and Oracle infra. But yeah, I'm an early tinker on most products, so found my way to Hyperliquid around 2024 or so. I think what really attracted me to Hyperliquid was, the builder experience. As someone who likes to be on the front lines of product thinking in crypto, Hyperliquid really just presented the best opportunity, the best foundation, the most SaaS-like experience in terms of like the grab and go infra that exists off the shelf on Hyperliquid to really build something like Paragon. And yeah, I think amazing community, amazing product and founder, led team. That's for me, it was almost like a vendor management decision that brought me to Hyperliquid.
Yeah, man, definitely. Yeah, I mean, I think builder codes kind of changed the entire way that people think about, operating in finance and doing, being able to scale the liquidity layer. Like, honestly, I think people are going to start to think about Hyperliquid, and probably already are, as just this like underpinning of a lot of successful front ends. Like the Hyperliquid front end itself is obviously great. People use it, people trade on it a lot. But I think that there's going to be this kind of push away into maybe, one day the similar to what Robinhood and Lighter have done, maybe Hyperliquid powers the CME future or something big like that.
Yeah, or replaces it altogether, right? I think that's what excites me as well, is this idea that people talk about it all the time, that the future kind of looks like Hyperliquid rails without really knowing you're trading on Hyperliquid. And I think that we very much intend for Paragon to be a part of making that a reality.
Yeah, most definitely. So talk to us about the Paragon story a bit. How did it come about? What is the kind of main focus for Paragon? And kind of how do you think about the deployer space?
Yeah. I like to say we're building an S&P 2.0 on Hyperliquid. So the idea is a ticker factory that mints buy buttons as soon as, ideas for a trade emerge or new asset classes are formed. If I really think about how S&P or MSCI function in TradFi, they serve this role of defining, the standard that the market operates on. And I really think that we want to position Paragon for serving that same role in the asset creation process. For a world where you've got news happening around the clock, right? Market cap moving, events happening over the weekend. We have things like compute emerging where the unit economics are, kind of being figured out in real time. And I think like basically, a ticker factory, right? An engine that can have its finger on the pulse of what consensus is almost as soon as attention is forming around it. That's what we're aiming to build on top of Hyperliquid.
Yeah, man. So there's been some recent pushback about the dominance of Trade XYZ and preferential treatment towards Trade XYZ as the dominant HIP3 deployer. When it comes to Paragon's stance and just kind of thinking about what the traction has looked like, how do you kind of think about the positioning of Paragon when it comes to Trade XYZ? And how do you think about this kind of dominance that Trade XYZ has had in the deployer space as it pertains to kind of the credible neutrality of the Hyperliquid ecosystem?
Yeah, I think there's kind of two questions in there, right? One is, how do we compete against a behemoth like Trade? It definitely seems like a David versus Goliath story. On that front, I'd say, it's early. You'll see a lot more coming from us in short order with regards to the roster that we've assembled to really compete in the HIP3 deployer space. And I think like as far as level playing fields go for turning the tide, what better battleground than crypto and blockchain native systems. So as we know, stories change really, really fast here. And our intention is for the conversation to quickly change from the Trade XYZ show to, hey, there's a new competitor in town. With regards to like preferential treatment, we don't believe that any of that is occurring, right? This is a permissionless network. It's not clear. Like you could see if there were any sort of structural or mechanical advantage that Trade has, and it's not apparent to me that there's any sort of insider information or ball going on. Yeah, I really think that's just like perception, often, somewhat misinformed takes and just the rumor mill. I think like incumbents aren't a reason to avoid right markets. If anything, they're a sign that product market fit exists. And really, what it says to me is we have to step up the caliber of competition in order to compete in this deployer landscape.
Yeah, and what's your thoughts on the strategy there as far as like, is it the quality of pairs? Is it the number of pairs? Is it more esoteric markets? Is it being quick? What do you think is kind of the defining factors that make a super quality HIP3 deployer? What are those factors? And then how does Paragon think about excelling in some of these?
Yeah, I think liquidity is a big piece of it, right? Giving traders the confidence to move with size on these markets, and that's something we've spent a lot of time on in the last few weeks. Shoring up that piece of the puzzle. I think the other thing is curation, right? It's kind of what you mentioned there, and I think curation in terms of reactivity, right? You almost want to be so reactive that you have this perception of being proactive, and listing folks listing tickers that folks want, right? I think that if we look at the success of perp exchanges and centralized exchanges in the past, right? Hyperliquid did an excellent job on their curation strategy. Binance, did an excellent job during the meme coin season on their curation strategy as well. So I really think, liquidity and distribution or liquidity and curation are kind of the first pieces of the puzzle to being a good HIP3 deployer.
And what are the most liquid markets that Paragon has currently as far as HIP3 goes forward? Like, what are the most liquid markets that you guys currently have traded, and what does that volume look like?
Yeah, so we've currently traded about 135 million to date. Again, this has all been done with a very quiet rollout and little marketing. Our first three indices were very much a proof of concept. We wanted to show that something could be done, net new on HIP3, other than listing a redundant, Tesla or NVIDIA perp. So what we did is we made Bitcoin dominance total 2 and others, which are commonly tracked crypto indices, actionable on Hyperliquid today. I think, again, along the lines of curation, it's pretty clear that even crypto native traders are thinking a lot about things like the AI trades, asset classes beyond tokens. So yeah, I'd say like going forward, our curation and asset listing strategy will definitely be multi, cross asset, and that was really always the plan.
And then, so from the perspective of Paragon's business model, is this thing just really get as much volume on these pairs as possible, and really just try to scale the amount of users trading these pairs? And on the kind of like the specific types of trades, I mean, you're looking at Bitcoin dominance, others market cap, et cetera. So it's kind of these more like, I don't know, I think of these as like trading view pairs almost. Like these are the pairs that I see on trading view only, but no one trades there's not like that many liquid perps markets for these types of more like, I don't even know what they are. They're indices kind of, but they're almost like derivatives of indexes in the market. Talk to us about what the vision and business model is for Paragon and kind of how you plan to scale the business, scale the volume, and what that translates into on the business side of things.
Yeah. So we started with crypto native indices. We're definitely keen on branching to, other assets. I think, the primary means of monetizing is the maker and taker fees generated from the volume on our pairs, right? So first and foremost, we want to kind of prove that we can be a good HIP-3 deployer. And what that means is listing assets that folks are keen on trading, right? The moment that they matter, the moment that they become relevant. I think that question is somewhat asset agnostic, right? A lot of the activity so far has been on the single name equity side. So that's really like our first plan, right? When re-entering the market here is making sure that we're like satisfying that need, right? Which is, hey, this trade is becoming front of mind right now. How do we make it actionable for anyone who has access to Hyperliquid, right? Anywhere where Hyperliquid lives.
I think that there's going to be a explosion of pairs listed from different types of equities across the globe, commodities. Obviously, there's been these like multiple evolutions of Hyperliquid. I think really it caught a lot of mainstream attention off the Iran oil kind of shenanigans that was happening. And then now we've just seen like pre-IPO Korean equities, AI stocks being traded. It's kind of funny, like no matter what the hot trade is of that, month or quarter, Hyperliquid's been able to just kind of manage that and be in front of it, right? And like always have that pair available through one of the deployers. And I think there's like a really unique edge in that of like, the amount of assets, like once the assets get listed, they're going to be listed until they're, delisted for whatever reason from each deployer. But it's almost like there's like this never ending catalyst for Hyperliquid that's like any event in the world, any geopolitical volatility, any new hot AI trade, any new IPO, like these are all like turning out to be catalysts for Hyperliquid, which is very interesting.
Yeah, and there will never really be a shortage, right? There will always,
that's what I mean,
there's always going to be a next trade. And I think you nailed exactly right, like the problem that exists in the traditional infrastructure stack that we think HIP-3 and Paragon as a whole directly solves. And it's this idea of how do I compress the asset creation process, right? So that if a trade or something like compute, for instance, becomes front of mind and consensus, like how can I express a direct view on that, right? And again, S&P and MSCI have been doing this for some time, right? They take an idea, whether it's the market as a whole or quantum computing, and they boil it down into an index, right, with a very defined methodology. But what they have to do is partner with the State Streets and the Vanguards of the world to make that real, right, into an ETF or a future. What's awesome is with HIP-3, you're all parts of that process, right, in one envelope. So as soon as it becomes relevant, you can define it and you can turn around and make that instrument real on Hyperliquid, right, and actionable for traders today. And I think what we're really doing is you're arming traders and investors, right, with a totally basically a real-time toolkit, right, for markets.
Yeah, and I mean, I think like the tokenization megatrend directly correlates to the perps megatrend, and these are two things that we've been very vocal about, and they go very much hand in hand. While they're different in the sense that tokenizing assets is typically thought of in the spot sense, the perpetual version of tokenized assets is kind of on the far side of the spectrum in terms of the investor rights and ownership compared to like a tokenized spot equity on chain with really good one-to-one direct backed ownership in a brokerage account that's KYC'd held by the issuer. But these two things are coming together and they're completely shifting the way people are thinking about like what we're doing on chain. Like we were just trading perps of crypto assets. Now we're trading perps on everything. We were just doing DeFi, yield farming and yield strategies with crypto assets. Now we're going to be doing it with vaults on any asset and with more complex strategy, perps to hedge things, to long things, to trade 24/7. This concoction of tokenized assets and perps coming together is like drastically changing the scope of the TAM of Hyperliquid and of the entire industry as a whole. In this bear market, it's just hard to be bearish. It's just hard to be bearish when you start to think about the type of volume that Hyperliquid's going to trade, the amount of OI that's going to be available, the amount of revenue that's not necessarily correlated to the crypto asset prices. Like we've seen Hyperliquid revenue stay somewhat steady, even though the amount of perps volume and perps interest, I think, in trading coins is like far, far less than what it would be in a peak bull. And so that, I think, like is the remaining bull thesis, is like the expansion of tokenized asset trading on perps on Hyperliquid, and then just the revival of the crypto market. You could easily see daily volumes on Hyperliquid right now, 3 to 4x, OI to 5x. In peak conditions, like I think $50 billion OI is a really reasonable target in the next bull run. And I think I think we can get to like $10 billion a day in volume.
Yeah. I mean, I think, it's interesting, like the dichotomy that exists, right, between, what's going on over in Hyperliquid land in the world of tokenized assets and kind of what you see on the timeline. And I guess the silver lining there is it makes your job as a retail investor or, a fundamental liquid investor easy when there are few projects of such high quality, right, and such dispersion there. And I think if I'm seeing this in real time, it allows me to build conviction in what Hyperliquid is doing.
Yep.
I think what's really interesting on what you had noted there is we're also, for the first time, starting to experiment with the status quo of perp dynamics, right? For a lot of the use cases that you're describing. So, for instance, like things like funding rates and like the open interest caps moving, kind of iteratively over time. These things can be like modified for use cases like pre-IPO perps, right? And perhaps like other asset classes. So it's really interesting to see like what the unlocks will kind of be, as this as the tokenization trend also like starts to proliferate. So for instance, like the idea of doing a carry trade, right, on a stock. Super interesting. I'm sure there's going to be like a whole slew of shops that emerge running like strategies that are exactly that. So extremely bullish. I don't really know where else I'd be spending my time as a builder in crypto other than Hyperliquid and kind of this front of where crypto meets the real world.
Yeah, man. Yeah, totally agree from our perspective as well. So, Taha, just kind of closing out here. What is the plans for Paragon in Q3, Q4? What do you guys have lined up for the rest of the year?
Yeah, we've got some big things coming. You know, you'll see some announcements from us in short order. Again, along this lines of, you know, creating a ticker factory that we think can keep up with the speed with which, you know, ideas and narratives are evolving in real time. Outside of that, we plan to be big contributors to the open source development that is occurring on Hyperliquid. So yeah, you'll see a lot from us on the HIP-3 front. You know, as HIP-4 becomes more and more of a story, we'll have our eyes on that as well. Yeah.
Love it. Taha, thanks for joining us. Congrats on the success. $135 million traded on Paragon, $1 billion soon. Look forward to the growth of Hyperliquid in the coming months. I think we're going to get a really nice summer move into the next start of the bull market. So we're just hanging on tight here and you know, staying patient. So thanks for your time, man.
Thank you. Thanks for having me.
All right,
Cheers.
buddy. Bye. Cheers, man.
Money, power, I'm money, power, I'm we get deep.
We get deep. We get deep. Hard. You know we get deep.
I'm upset.
Yo,
I like that.
guys, what a show. I mean, we're just taking a little pullback here, Rob. Everything's going to be all right. Vibes are still up. It's a beautiful Wednesday. New York City. David Shamish just went on Capital Flow stream. Got grilled.
Oh, boy. What did he say?
They're kind of recapping it right now. Let me show you. Let me show you. We'll just play it from here. The end of the show. Here's the takeaways from Capital Flow's stream with Per CEO Shamus. As you guys know, we are shareholders of Per, longers of Hype. Here we go.
All right. Let it go. But I think that there is a clear anchoring in the market, I believe, around like these types of conversations where all of us realize, okay, like they're very well aware of everything. There's
Dude,
not
the Mnet.
this
Oh, we lost him.
kind of clear awareness
There he
of
is.
the marketplace and what they're doing. And I think that everyone has become, I mean, we're entering a new world a little bit, but like everyone has become so
Yeah, we're
accustomed
entering
to,
a
like,
new world where the
basically
gamma squeeze is on
Michael Saylor as
off
the
the
model
table.
for how every DAT should function, right? And I think that it's easy to go to a pendulum shift on the other side and be like, oh, I'm just going to be completely private and do all this other stuff. And I feel like leadership is like figuring out their lane a little bit. But I also think that in terms of I've never had a problem with the warrants, by the way. I think a lot of people are like really concerned about those. I actually think him explaining some of the elements of like shares transferring and some of the lockups, probably the most bullish thing that he said that people don't really get. So I think that's really significant. And I also think that we're going to, my belief is that we're going to trade through some of these warrant strikes and people are going to think like, oh, that's where all the selling pressure is. And it could be very much like the hyperliquid unlock side where it's like, oh, as soon as we hit this unlock, it's all over.
Yeah, that's all irrelevant to me. It's not about that. That's all.
Thoughts? Sounds like a lot of cope right now. I'm in the same boat.
I don't even know what these warrants, I don't know what it means. Warrant strike sounds like unlocks.
Yeah, at certain prices, they get like call options on. So if it hits like in between 950 and 18, there's like certain like unlocks.
But we've already hit those. We've already hit those strikes.
Yeah, exactly.
So then those levels would have already been unlocked.
Which is why I think that they're saying it doesn't really matter. I mean, this thing is on it's on do or die. And like, honestly, yeah, I can't lie. The die looks pretty likely. I can't lie. When you test the level once, twice, 3, 4, 5, 6 times,
maybe the level doesn't exist. Is the level in the room with us right now?
Like market understands. Yeah.
Totally. Yeah. How about you? What were your kind of initial thoughts?
Dude, James was snapping on him.
I'm mixed on it, honestly. Part of me thinks, and I don't know if David's still watching, but part of me thinks that nothing's going to change on the story front. Like, I think he can understand what I mean, or I'll just be interested to see if any changes take place on the why are we a different DAT than everybody else?
I mean, they're up $1 billion.
Everybody
Why do they
know
need
that.
to change their story?
Everybody should know the ticker. They don't.
Yeah.
And
I agree. I mean, they're up $1 billion.
He's clearly doing something right. Yeah. Like what else is there to do except play squash, let the market absorb the selling that is currently happening because of the war, run through that, just survive with a nice chunk of profit over the next few months and let the bull resume. What is it? Why does he need to do anything else besides just hang on to the hype that he's got?
Well, because like, why would you buy per? Right. That's the question. Like, why would you buy it?
Because Hyperliquid's going up.
I agree.
And you think that they're going to do a good job managing their Hyperliquid position?
Shows that they want to be part of the ecosystem.
Yeah.
Per is a meme coin from the Hyperliquid ecosystem that like Jeff created. That shows, hey, we're going to be active in this ecosystem. To me, we're Per.
Yeah.
Like we get it. We're one of you. Yet it feels as if they're not, because they're unable to tell the story in the best way possible.
Sorry, I don't really understand what telling the story means.
No, neither do I. I mean, I think they do a pretty good job of telling why Hyperliquid's valuable.
Yeah.
I understand what he's saying when it comes to like being part of the ecosystem, not only like culturally because they have like a funny ticker, but also like David came on our show multiple times and talked about how he wanted to utilize the Hyperliquid position in Per to further the ecosystem. For instance, like if you want to buy a ticker or deploy like a HIP-3 instance, you need a critical mass. I think maybe is it 200,000 hype? It's like a good amount of Hyperliquid. And Seamus said that he was willing to rent out the hype that he has on his on Per's balance sheet to people that want to buy these tickers.
Yeah, I know. And he said that in the interview as well. But he said that they haven't really found anyone who they deem worthy of doing that yet. Somebody says, NOCSM says they cannot sit on that billion. They have to take some off the table.
So sell their position.
No, I think they just need to buy back the stock under 0.9 MNAV, which we're getting awfully close to.
Are you going to get that? Are you going to?
And they have cash.
Yeah, what are you going to use to buy it back? You're going to use cash? Or you're going to sell some hype to get the cash to buy it back?
Look, they're almost at that level.
And they only have 150 million of dry powder.
Yeah, but the stock's small.
So what? You think if they deploy like 50 mil into their own stock, they're like...
Bro,
What's the market cap of the stock?
It's only like $1 billion something. 1.75 bill fully diluted.
Yeah, 1 billion.
Yeah.
I mean, yeah, 50 mil isn't nothing.
Definitely not.
So they just take some of that dry powder, put it towards the stock, get the stock up a little bit.
Yep.
Yeah, makes sense. Looking up the market cap of BitMine. Down 52% in 6 months.
Yeah.
Down 87% over the last year. Yikes. Market cap of 8 billion. That puts these I mean, you got to think like you could basically take the Hyperliquid strategies market cap and add it to Hyperliquid, which would put another billion on Hyperliquid's market cap. You could do the same thing with BitMine and ETH. Like these things are sizable. I don't know, man. Market's in a tricky spot. Got to get through this Iran war. Got to improve the macro conditions a little bit. And I think overall, we're going to be okay. I tend to think like it's just chop season. Just don't get chopped up. And we're going to be all right.
I agree.
Going to be all right.
Ladies and gentlemen, another amazing stream from the tokenization tower, guys. Wow. Hyperliquid Strategies, guys, under fire. Our friend of the show. We need a bounce.
I mean, we had the bounce, but are you saying we need a bounce and just continuously going up? That would be nice.
We got the weekend bounce.
The weekend bounce.
We need another bounce.
We need it to bounce and then don't stop bouncing.
Guys, W's in the chat. You know where to find us. Again, here tomorrow at 12:30 p.m. Eastern. Financial capital world, the
That's a
tokenization
banger.
tower.
Turn that thing up.
We are vibing.
Where is that coming from?
We need a bounce. And then we need another bounce.
We need a bounce.
And then we
need another
one.
bounce. And then we need a weekend bounce for our boy's birthday. And then
Yes,
we need
sir.
another bounce and then another bounce.
We're going to need
If
a couple
we
bounces
can
here,
get
guys.
that, we're going to be all right.
Guys, we'll see you tomorrow. Thanks for being a part of the show. You guys make it amazing. We love you guys. We love the chat. We love the messages in the chat. We love to respond to you guys, talk to you guys, walk you through the portfolio. Our coins had a little pullback today, but we're not going anywhere. Each day gets us one day closer to the beginning of the bounce that has a following bounce and a consistent bounce and then another bounce. We're getting
Guys,
closer to that.
Stay bouncy. Stay bouncy, all right. Stay bouncy
Cheers,
out there.
guys.
Right?